Absolutely. How will that affect the opening trade? I think we're about to find out. Keep an eye on the airline sector this morning. We could see a significant impact, but it may be broader than that. We don't know. So here it is, the opening trade here in Europe. Fingers crossed we're actually going to get one, I think is probably the first thing that we should probably be pointing out. It looks like we are seeing DAX trading this morning. I'm not seeing anything else at this point, which starts to maybe ring a few little alarm bells. There we go, the stock 600. You get a price, maybe those two are connected. We're getting DAX trading feeding into the stock 600, but I'm not seeing other pricing coming through. There's the IBEX. It's coming through a little bit slower this morning, which is making the hairs on the back of my neck begin to stand up a little bit. The CAC 40 is down by 0.2% The FTSE 100 and the FTSE MIB are obviously interrelated. I thought this may just be an RNS issue. I'm beginning to wonder about that now. We do not have a price on the FTSE 100 this morning. As you can see, there is a C next to it. We do not have a price on the Italian market either. We have a C next to that. Both of those markets, from a data point of view that we're seeing here at the moment, look like they remain closed. I thought it was just an RNS issue. I thought we would be seeing trading, but it doesn't look like that is the case, guys. It looks like maybe this is going to affect financial markets this morning.
Yeah, absolutely. And no surprise that we see the aviation sector being hit hard this morning, under pressure. So travel and leisure as a whole down by 1.3%. And within that, we have TUI down, Ryanair down, EasyJet down. I mean, these are down by 2%. We'll see how long this lasts. We'll see how long it takes for Microsoft to get all these issues solved, if that is what is driving this seemingly widespread technical outage that is affecting various businesses. And it seems that the aviation sector, to Guy's point, the aviation sector is the one we can see right now, because it's pretty obvious when airports don't work and they report things to authorities pretty quickly. We don't know how far this goes. Other businesses could be waking up this morning here in Europe experiencing issues connected to Microsoft.
When we're looking at some of those individual movers, Lufthansa seems to be taking a pretty big hit as well, down anywhere from 1.5%. You're seeing trades come in hot and heavy there. The IAG trades are coming in a little bit slower as well, but still down, to your point, Anna, by about 1%. Those are the two big ones that I was keeping an eye on. Outside of the aviation sector, though, when you do look at kind of the sentiment story, a lot of those miners, a lot of the commodity trade that we were seeing play out on the macro sphere are seemingly down, weighing on the index guy when it comes to the stock 600. But again, a few slow trades still panning out.
And I can see some stocks in London trading. I can see them moving. Yeah. It's just that we're not getting that
index calculations.
Yes. Yeah.
So maybe the issue isn't as great as we first thought, but nevertheless still one to keep an eye on. Let's try and get an understanding of let's segment this and try and get an understanding of kind of what is going on. It clearly looks like it is going to be a transport related story initially,
at least first off, exactly.
But as you say, the airlines probably are feeling this first because other companies won't be kind of alive to the issue.
Such a time-critical business.
Exactly. Benedict Campbell leads our aviation coverage, our global aerospace coverage. He joins us now out of Berlin. Benedict, give me an idea of what is going on. Just kind of, you guys will be collating and looking at all the various impacts that we are seeing around the world. Just give me the top-down view of what it's looking like.
Frantic, I think, is the word we're all looking for, and it seems to be a cascading line of failures that we're experiencing. We have colleagues in Asia, going from Australia to the US, here in Berlin, it seems to be down everywhere, the system. For instance, the Berlin airport, obviously not the world's biggest, but that's down. No operations there. We've just received notification from the FAA, the US regulator, that there's no more takeoffs from the likes of American Airlines, Delta, United. We're checking on Heathrow, obviously, the most important airport here in Europe. So it's very much chaotic at this point in terms of the news gathering, but also in terms of what we know and how deep this goes. To your point, this seems to go beyond the airline sector. You've spoken of the LSE, we're hearing banks. So it's really sort of the depth of the problem that we're trying to explore right now.
But just with the airlines, do we know what the issue is? I heard somebody earlier, I think it was Anna's, talking about the fact that this is cockpit related. Is it cockpit related? I heard from Cathay earlier on that maybe it was check-in related. Do we know whether this is a safety issue or just a sort of broader operational issue?
It seems to be the latter. So the cockpit, so it's not obviously something that's inside the cockpit. This is the interface between what's happening on the ground and the cockpit. And, we have had disruptions previously. What we've not seen in a very long time, if ever, is a disruption on this kind of scale. This is new. So that's what we're trying to figure out, where exactly the fault came from and how quickly it can be fixed. Some airlines have said that operations are slowly coming back, whereas others seem to be falling into this issue now. So, it's very much sort of an in and out operation at the moment. So the interface between ground control and the cockpits, and again, there's always a lot of security built into this. So whenever there is an issue, the mode of operation usually is to sort of slow things down, keep aircraft on the ground, just to keep people safe.
Yeah, and just to flag to everybody that we are now running a Top Live blog, a T Live blog, the team on the news desk, getting that up and running really quickly, and that's running across the Bloomberg terminal. So there's one place to go to get updates on what seems to be this widespread technical outage. Microsoft saying they are working on this. Benny, can I come to you about, in terms of how logistically this is managed when you bring this many aircraft? I mean, this happened in the middle of the night, I suppose, stateside, so maybe not quite as many aircraft flying as you would expect, but when you're bringing them all to the ground, you start running out of places to put them. Give us a sense of, if Microsoft does resolve this, how quickly you can get things back to normal. This takes time to stop and then restart.
Well, that's exactly it. These things have this sort of cascading effect. You're going to have a lot of aircraft that are out of position. So this will usually take, a problem of this magnitude usually takes days to resolve in terms of getting everything back to order. Now, don't expect planes to come falling out of the sky. Let's not panic. But as a precaution, people will be on the ground. I've just heard from a colleague who was due to fly out of Berlin today. That's stopped, that airport operation. So you will see planes landing in places they shouldn't be landing, i.e. airports they shouldn't be landing, not in the green field. And getting that system back in, it's a very finely tuned operation. That's going to take a while.
Benny, thanks very much. Benedict Camel joining us there with the latest on the aviation sector. One of the early sectors to respond to this kind of technical outage, it would seem, but it might go wider, of course. Karim Chedid joins us, head of EMEA investment strategy at BlackRock. Now, Karim, when you said yes to this interview, we didn't know we'd be talking about technology outages, and we won't pretend we know more about this than we do. This is very much a developing story. We're keeping an eye on Microsoft and what it's saying, but we do see evidence that the aviation sector is impacted, the LSE, banks over in Australia, so we'll look for the banking sector to be an area where we see impact. I suppose there's not much we can say thematically about this, other than it illustrates that when lots of businesses rely on one provider, or maybe many providers, but relying on this provider, if it has problems, that goes far and wide, and we're getting an illustration of that today.
I mean, when we look at the tech sector, for us, it's been a theme, a very important theme, obviously, with the concentration of the rally in the stock market, but also looking at some of the thematics, like you say, beyond just the big tech names. What are some of the other themes in tech that investors have been looking at? And one area is digital security, for example. This idea that within tech, you need more reliance on companies that provide security in the cyberspace and the tech space, but also some of the other thematics we've seen are around infrastructure-related themes, which have a relevance also to AI as we think.
And I suppose cloud and tech optionality is something that businesses are going to be thinking a lot about this morning. I'm not sure how much that plays into your wider view on tech, but cloud has come such a long way as a theme, and I wonder if this raises questions about that.
Yeah, certainly, it's a very important theme within tech that has been already a focus on a subsector level, but certainly it's the tech thematics have been an area where we've also seen a lot of interest in ETF flows.
Look, I guess we should draw parallels with the pandemic. You think about what we learned during the pandemic and supply chains. This is in some ways a supply chain. This is a part of the supply chain story. During the pandemic, we learned where shortages were, chips, etc.
With no stock. This is one that manifests itself really quickly, isn't it? This supply chain issue, it's on demand. We're relying on these cloud providers right now. To be able to deliver. Does it imply, which a lot of companies have learned the lesson of, that you need to diversify? Does it imply that you need to have more resilience in your systems? Do you need to think about what happens when one supplier can't be there? Can another supplier be there? And that's a lesson that a lot of businesses have learned during the pandemic. And I wonder whether this is I don't know how substantial this is ultimately going to be, but maybe one of the takeaways from this is you need resilience in your systems.
On a micro basis, 100%. From an investor standpoint that isn't actually directly invested, I thought the market action this morning is fascinating, not just in the terms of the individual airline stocks we're talking about, but you're seeing this in the macro haven assets as well. A bit into the dollar, a bit into the yen, a bit into the Swiss franc. Futures dropping in the States, a bit into treasuries. This is your classic risk-off bid on a macro front. And I kind of thought, given that we were talking about some of the issues around what's going on in the Swiss economy, the Japanese yen, et cetera, those go-to havens wouldn't be go-to havens anymore, and yet in a moment like this, they are. Walk us through that.
Yeah, I think it's sometimes the traditional risk-off playbook does play out. There is one thing that when you talk about supply chains, that comes to my mind, which is around this theme that you have more sticky inflation in this system. Because when you have supply chain disruptions, when you have one of the mega forces that we focus on is this fragmentation theme in supply chains, which ultimately is one of the reasons why in our core macro view, to your point about taking the big picture and thinking top down rather than bottom up, although the bottom up is super important as well in times like this, the broad macro view is that inflation is here to stay, even though this inflation has been a big theme this year. And so when we tie it to things like the ECB meeting yesterday, the Fed coming up end of July, higher rates for longer is ultimately here to stay in a world where inflation is more sticky.
In theory, the cloud should be disinflationary, shouldn't it? You would have, in theory, but if you have to have multiple suppliers, maybe that doesn't turn out to be the case. Maybe if you're more cautious about putting your stuff into the cloud, that has less of an effect as well.
But isn't this the very concern we saw? You talked about the pandemic, but since then, so much investment, and we saw this show up in the likes of cybersecurity stocks, for example. There was a big push into cloud, a big push into AI, and then a big push into defense to protect against things like this. Not that I'm saying this has ulterior motives, but even cybersecurity is meant to prevent against some of these kind of software glitches. Is this something in the more longer term, I'm broadening this out, we invest in? It's simply because this week we've had a slew of geopolitical news, and time again, we haven't really worked out how the geopolitics, specifically in the States, plays into that playbook. But moments like this might.
So we just published our mid-year outlook and our investment directions piece, which really talks to some of these themes in terms of how to invest in themes in H2 against this backdrop. And we look at a few things. We split it into key trade ideas in equities, in bonds, and in portfolio diversifiers. The reason why we stripped out a whole section on portfolio diversifiers speaks to this point around what are the diversifiers in this environment? Is it the traditional safe haven in bonds, or is it looking at greater allocations to things like gold, where gold has done pretty well even in a high real rate environment, and it's only recently that we started to see a turnaround in ETF flows into gold, even though it's been doing well for quite some time, and even though the negative correlation it usually has with high read rates has broken down.
This morning.
Right. That's interesting. Well, I was wondering about how this plays into the rotation theme. We talked a lot at the beginning of this week, Karim, about rotation out of tech, not sure anybody saw this coming, but out of tech into small caps. Is that something that, if this continues, maybe just underscores that, but even without that, do you see that as a theme that continues, that broadening?
Yeah, I mean, obviously, notwithstanding the events this morning, we're all still digesting the news and what the market implications could be, but we take the view, when we look at that rotation, that it's not really backed up by fundamentals. So when you look at the fundamentals, actually what we're seeing is that earnings are still driving the tech sector quite well. Now, we are expecting breadth in earnings. So it's not rotation, it's breadth. So we're expecting breadth in earnings. When we look at 2023, the S&P 500 earnings growth was around 9%. Without Magnificent Seven, it was 0. This year, we're expecting those numbers to be much closer. We're expecting earnings to be about 13%, and without Magnificent Seven, 11%. So there is less concentration in the earnings picture, which fundamentally means that we could have less concentration in equities, more breadth in the market rally, but not rotation. So we still like the leaders as well.
In terms of what we learned this week, this has been a really weird week. We've seen a rotation out of big cap stocks into small cap stocks. That seems to have reversed a little bit. We're trying to factor in and think about how we price in the Trump trade right now. There seems to be a lot of uncertainty at the moment. In terms of kind of where we go next, what needs to be clarified for this market to regain a sense of direction? Do you think we have a sense of direction at the moment?
I mean, it's certainly a bit more choppy at the moment, but the direction of travel is still up when you zoom out. So despite some near-term volatility, and we do expect that choppy trading to continue. So we do expect
more volatility is something that we should expect over the coming months.
Yes, but with a higher direction. So we remain overweight equities, and we within that equity overweight, we have conviction on the US and Japan.
Okay, so you remain overweight equities. If big tech continues to sell off and the market broadens, does the index go up or down?
Up. So we're overweight equities because we think stocks can continue to deliver returns in this environment, especially as we see the rate cuts continuing.
Do I buy the index at that point, or do I have to be much more stock selective?
I think you still buy the index because we still expect the leaders in that index to go up, especially backed up by the fundamental story in earnings. But there will be opportunities in the other parts. So that's why I was saying it's not a rotation, rather it's a bit more breadth.
Okay.
Karim, thank you. Karim Chedid, Head of EMEA Investment Strategy at BlackRock. Just a quick word on where we are on markets. Stock 600 down 0.5% this morning. We don't have that price for the overall index on the FTSE 100. The CAC 40 down 0.4%. So we do see some modest selling across European equity markets in response to this, and US futures certainly dipped on the back of this. And to Kriti's point, we did see some move into some of those havens this morning.
Yeah, it's a really interesting dynamic. We're going to, of course, keep you apprised of all the developments as we monitor them from the airline space to the more macro. All that coverage and more coming up next. Stick with us. This is Bloomberg.
trillion industry. There's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Minutes into the equity session this Friday morning, the story that is dominating are the outages that we are seeing around the world. The transport sector is being affected. We've seen a number of airlines this morning having to halt operations, both ground operations at the airfield, checking people in, etc. It started in Asia. We are now seeing it rippling through Europe and into the United States. It is affecting other areas of industry as well. We are monitoring what is happening with the banking sector very carefully, and also some of Europe's exchanges. Let's continue to get an update on what we know and what we don't know. Sam Unstead from our Bloomberg Markets Today blog joins us now around the table on set. Good morning. What do we know?
Well, at the moment, we're still learning. So the really, really key thing that we know, and we're now live blogging this separate from Markets Today, is Microsoft. Microsoft 365, if you go to their status page, it effectively lists almost everything as being down, or service degradation, as they call it. So that is leading into issues with IT systems all over the place. You guys have already mentioned the airports and airlines. That is probably the most visible sign of it so far. But if earlier this morning, as this was starting to emerge, and actually as we were sat here waiting for announcements to come through from the RNS, and they were not, we started looking around places like Down Detector and trying to get a sense of exactly how widespread this actually is. And on there are a large number of companies you just mentioned. UK banks are on there, lots of airlines in particular. That, as I say, that seems to be the main area where this is hitting. But it's also providing a little lack of visibility for trading, as you guys, again, have sort of already mentioned. A lot of online brokers are also reporting there's some issues with their services and logging in.
We have had one viewer write in, though, to say he is up and he is trading. So, well, you know, somebody's at it. But the FTSE 100 is now giving us, we are now getting our price on that. So we're down 0.6%. So it's among the worst performers in Europe, that overall index. And the banks you mentioned, Kriti, I think you were saying that the banks are underperforming there. Tell us about the link with CrowdStrike then, because I see so we've got some Japanese reports that problems seem to arise in PCs with CrowdStrike security software installed. This is coming from our T-Live blog that you referenced. And they cite representatives from Microsoft Japan and CrowdStrike Japan. So that's an area that we're now going to be looking into. Yeah, and a couple of other areas as well, a couple of other mentions in reporting, particularly out of Australia, and some companies as well who have been tweeting of the issues that they've been having, and they've been mentioning CrowdStrike in particular. And so this morning, we're still waiting for, obviously, US pre-market to open. But on TradeGate, CrowdStrike has securities there, and when I left my desk, they were down about 6 or 7%. So they are also getting a bit of a focus. Microsoft, actually, on TradeGate as well, was starting to dip a little bit lower as this continued. And it may be, actually, as you sort of mentioned, we're starting to get some prices. It may be that this is starting to resolve itself. But certainly, CrowdStrike, Microsoft shares were a little bit weaker earlier on.
And I was talking about the banks as well. So you mentioned it, and I should just point out that HSBC, Barclays, and the London Stock Exchange, in terms of index contribution, are some of your biggest weights on the FTSE 100. Mm-hmm. But I'm curious kind of what happens from here. Is this something that, and we've seen previous iterations of this, at least over in the States, when there have been things like outages, et cetera. What is the playbook that you've seen in terms of this play out?
Well, obviously, it depends how long it goes on for, right? I think the main area, as I say, you guys have already covered this really nicely with Benny, but the airlines is really the main sector where you're going to see a real impact, because even if this does get sorted out very quickly, it's causing huge disruption, very, very significant disruption that will filter out globally. So that's the key area. For everyone else, it really entirely depends on how quickly it gets resolved. If it gets resolved relatively fast, then it ultimately doesn't have a huge amount of impact. There may be a little bit of, Kriti actually mentioned earlier on, a little bit of a risk-off move in markets. Whether that's down to this or whether that's down to just the sort of general mood, we'll see as the day goes on. But you may see a little bit of that if this continues to go on for a long period of time.
Is this a supply chain disruption story?
Well, yeah, actually, I heard you talking about that earlier, and I think that's actually a very smart way to look at it, is that you're sort of saying, particularly during the pandemic, you had lots of companies who were reliant on, sort of, say, one major provider.
Suppliers.
Yeah. And now you're having the same sort of thing with IT. You have, within the cloud market, only a couple of really, really major, huge companies that that control the vast majority of the market. So when you have an issue like this and something goes down, and when you look, it's a relatively, what should in some respects be a relatively minor issue. It's one update from a provider to the provider, but it's having this huge impact across various parts of the market. So it raises that same question that was asked during the pandemic. Do you need to have a sort of more diversified supply chain so that when these things happen, things can step in? Yeah, that's certainly, I think, a more existential question that will come from this.
Yeah, I was just going to mention that Air France is saying this morning that flights en route are not affected by this issue, so that's perhaps useful to point out. But Guy, also, I'm looking at the T-Live blog this morning, and somebody the aviation team making the point that outages do occur. Aviation is grounded sometimes, but often it's to do with one particular geography, and for it to happen on such a scale in what seems to be 3 different continents is extremely unusual.
Well, that's what the point was Benny was making earlier, is we've seen this, but we haven't seen this on this scale, and it speaks to the interconnectedness of the airline sector and again the reliance on key systems. That is in some ways the other story here, is that these are systems that speak to each other globally. We talk about the fact that these are affecting, that there are a few suppliers here. There are only a few suppliers globally that manage technology on this kind of a scale, and you think about the way that the AI story is developing. You almost wonder whether that gets even more concentrated. In order to be able to get scale in that business, you have to spend aggressively. And again, there are only a few companies that are capable of doing that.
All right, Sam Unstead from our Bloomberg Markets Today team, we thank you so much for sticking, of course, with the story. We've got plenty more coverage ahead. We're going to hit it from all the different angles, from the airlines to the banks to, of course, the defense story as well. We'll bring that all here, right here, live on Bloomberg Television. Stick with us. This is Bloomberg.
Names in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
I especially am afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Yeah. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
DOJ or other authorities.
Could face bigger challenges next.
Was going to keep reading World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Half past the hour, welcome back this Friday. We are monitoring an ongoing situation which is affecting businesses around the world. It appears to emanate from Microsoft, from CrowdStrike. It is affecting airlines. We've already talked about the impact there. It is impacting trading to a certain degree. It is impacting the banking sector here in Europe as well. We are seeing equity markets under a little bit of pressure this morning. We sold off into the close yesterday. We are continuing to sell off this morning, probably as a result of what we're seeing here. Airlines are being affected, but it's not just the airline sector that is under pressure this morning. We are seeing the banking sector under pressure as well, and we will watch to see how the US Open kind of we'll get pre-trade in just a moment, in around half an hour's time. So we'll see exactly what the ripple effect is going to be into the US Open a little bit later on. But certainly early indications here in Europe is that there is a market effect from what we are seeing. We understand there's a banking effect as well. Joining us now to discuss that, sitting next to me, Tom Metcalf. Tom, good morning. We've been discussing this around the table this morning. We're trying to understand the various impacts that this outage is having. Walk us through what you're seeing in your sector.
Yeah, I think widespread is the word. It's a lot of different banks we're hearing are having issues. It's not quite clear exactly what's going on. It's obviously what we're running around asking about, like how are trading floors affected. But pretty much, a whole range of firms, and that does speak to the fact that it seems to be a sort of Microsoft-led issue, because that's why you're seeing all these industries impacted. So for me, it's quite extraordinary, because normally when you see these outages, it's a little bit more sort of localized onto one industry, so there might be a finance issue, but this time you're looking at airlines, airports, and then all the way through the finance system.
Is it even more difficult to get that information out of these businesses this morning, because we're not necessarily getting all the RNS releases from the LSE that we might, because I imagine there's plenty of companies that would have to report this kind of thing, or would choose to in some way.
And as it's developing, right? So no, that's the kind of responses we're getting. Is we're just trying to find out ourselves almost. And yeah, no, that's the interesting thing. I had a very quiet Friday morning because at 7 a.m. not many sort of news releases came through, and then some are coming through in dribs and drabs. But broadly speaking, that was probably the earliest sign that something was amiss in Europe.
But we already saw that there was just an immediate delay in terms of the stocks opening even as well. And I'm curious how much of that is kind of a sector story or an exchange story, specifically in terms of the pricing. How do you think about that?
Yeah, no, I think it'd probably be an exchange story, right? And we're seeing big delays. I think quite a few of them have now come back online, which, when they were down for 20 minutes, that's pretty unusual. There's something major going on. So yeah, and it's really fascinating and makes you realise just how sort of dependent, every industry is on certain key providers like a Microsoft.
This is meant to be one of the airlines as well. This is meant to be one of the most resilient sectors. Yeah, it's meant to have. It's got armies of IT people that are meant to prevent this industry being affected. I'm presuming lessons are going to be learned from this. And again, we've been discussing this around the table as well this morning. It speaks to this isn't a security issue, but it speaks to the potential what a security issue, what vulnerabilities could look like, and how and the effect that they could have. Everybody's always been terrified of what could happen within the banking sector and the financial system. Were you to see significant glitches, is this kind of what has been done over the last few years to prevent this kind of thing happening?
Yes, that idea of a single point of failure, right? Because you do not want something as widespread. So, you know, Microsoft hasn't necessarily been in the headlines or the crosshairs apart from around cloud computing. So that's what the FCA have been doing is, oh gosh, Amazon, Microsoft, Google, loads of banks are dependent on their cloud services. So that's where I've seen the most sort of regulatory action. You know, certainly there's going to be a lot of questions, and it'll be very interesting for me the length of time this takes to resolve. You know, if we're stretches right across the day, that will be a very painful day for a lot of people. And, you know, I think that will probably dictate how sort of extreme, I guess, the regulatory backlash
response will be. Yeah.
We're just looking for signs of where this goes next, and we are getting a sense that maybe this is coming to the media industry as well. Universal Studios out of Japan, a broadcaster here in the UK, lots of businesses then talking about these outages and the effect that this is having on their business. So we will try and keep you informed of all of these as they come to us. And we are still running this top live blog. TLIV Go is the function to use on the Bloomberg terminal. To access that blog, you'll see the headlines on there telling us that banks, airports, the LSE are all reporting system outages. Microsoft earlier dealt with the Azure cloud disruption. There certainly have been links drawn in Japan between CrowdStrike and what is happening with these Microsoft products. And certainly the aviation sector is one that we're watching very closely. That seems to be where we're getting.
A global ground stop by US airlines is a phenomenal thing. For that to happen, for the scale of that, United, Delta, American, all issuing global ground stops on all of their flights. This is the biggest aviation market in the world. To see something like that happen will have a profound effect.
Well, the last time, and I think the only roadmap, more recent roadmap, was when this happened with Southwest, and the FAA had to do it. And it took, I think, somewhere from 3 to 5 days to get everything back online and on schedule again. But even it was almost a week before it fully came back together.
We need to join a few dots this morning. We have been busy on the defence front, on the global geopolitical front. We had a NATO meeting. We've had the European gathering taking place at the birthplace of Winston Churchill just over the last 24 hours. And all of that's been focused on some fairly traditional geopolitical threats. Cybersecurity often comes to mind when we think about technical failure. We've got no evidence that that is in play here. But there are a lot of competing demands when it comes to corporates and indeed governments and the amount of money that they spend on technology. Let's talk to Fenella McGurty, Senior Fellow for Defence Economics at the International Institute for Strategic Studies. Fenella, I know your area of focus is very, much around the defence sector, and that's not particularly relevant here. Although we'll wait to hear whether any of those areas of the world are affected, any defence providers are affected by these issues with Microsoft. But when we were talking in the break, you were suggesting that this just reminds us of all of the competing demands there are in terms of where businesses and governments spend their money, because this does raise concern. It makes you think, at least, about spending on IT protection.
Good morning. Yeah, absolutely. I think the main issue that we're finding within defence budgets is that issue of finding the scope to increase funding for a wide range of requirements, and this just really points to the extenuating pressures that there are. Cybersecurity is obviously something that's been focused on for a long time within budgets, and funding was being increasingly focused towards it. But now we're having these wider pressures within defence and security budgets, and it's kind of muddying that water between defence and security, because once one of these attacks happens, it really starts to impact everything else, and it becomes a wider defence issue.
Right, and I'm not suggesting that this is a cyber attack. I should just make that point once again. But just to, and Microsoft saying that they're progressing with mitigation efforts for the 365 apps and services. That's a headline just crossing the Bloomberg terminal. So let's go to defence matters proper, Fenella, because that's where your area of expertise is and where we can get the most from our conversation. We have a lot of focus on defence budgets, and we have President Trump, of course, often likes to call on Europe to spend more. Former President Trump, I should say. He likes to call on Europe to spend more. Give us an update on where we've got to on the amounts that Europe is spending on defence, and whether we're getting close to what former President Trump has been calling for.
I think NATO members have really made extensive progress over the last few years to fulfill that investment pledge that was made 10 years ago to reach that 2% of GDP by 2024. And we really saw defence spending surge in 2024 in order to sort of finally reach that mark. And a lot of countries are now achieving it. According to official NATO figures, 19 of the 32 alliance members are implementing double-digit growth to defence in real terms, which is really remarkable when you consider that inflation rates are as high as they are at the moment. So this year they're expecting 23 members to reach or exceed that 2% goal. So countries really are making that concerted effort. They are refocused on defence, and they really have to. It's not just the political pressure from the US, but it's also obviously the security and strategic drivers in Europe itself that's causing these uplifts. So Europe's taking a far more assertive role, I think, in its defence now.
But speaking in that assertive role, you said so yourself that in terms of the finances, there is a lot of handcuffing here. You're seeing these big promises of getting 2%, 3%, in Poland's case, even shooting for as high as 5%. Is this what kind of time frame are we looking at to actually get there, if indeed at all?
So the other thing that's kind of coming through is a longer-term commitment to defence spending. I think an issue that we had in Europe over the last 10 years was we didn't have enough long-term planning. Companies didn't have that future forward-looking perspective in order to make investments and to continue to grow their companies. So countries are now saying there's this time frame, we're going to spend this much. Arguably, there could be greater transparency where the countries need to explain how exactly these increases are being funded, what kind of budget items are now being counted as defence, sort of in that wider definition. As I said, security, there's a bit of a muddying of the waters. So countries are now kind of including elements that may traditionally have been security spending within the defence budget to kind of prop up the figures a little bit there. So greater transparency would be great in order for countries or industry to have that more security of supply, as it were.
Okay, let's talk about the security of supply. Fenella, if Europe spends more money on defence, does it spend that money in the United States or can it spend it in Europe?
Oh, this is such a key question because the latest industrial strategy from the EU found that far too much funding within Europe was being spent outside of European borders. So I think it's partly skewed because we do have some major programs, so F-35, for instance, which wouldn't kind of fall in every single year. It's a major program that comes in, and that will sort of bump up the US proportion of European defence spending and where it goes. But there's such a concerted effort to use European spending on European projects and to bolster domestic defence industry. But that said, I think what we're finding is that countries are actually facing a bit of pressure, certainly on the eastern flank of NATO, where we saw Poland make huge purchases from South Korea as opposed to Europe. And that was because they argued that the sort of speed, the ability, the deliveries would be far faster in order to meet very urgent operational requirements. So even though there is that effort, there's other competing priorities, not least that there are huge capability gaps in Europe that are needing to be filled, and countries will fill those as and when they can.
What's the timeline for closing those capability gaps? We're struggling to build to manufacture enough ammunition, tanks. Just kind of the kinetic kit that we need to fight wars potentially is where we're really struggling at the moment. We're not even talking about some of the cyber stuff that is obviously front and center this morning as well. Where do those gaps exist right now? I remember the head of BAE Systems saying we could double production fairly easily, but taking it beyond that is something that is really, really hard. Have we doubled production already? Are we already coming up against those limits? How quickly can we resolve it?
So countries have implemented major programs in order to bolster production. But the problem was that going into this, European defence industry was at a very lean point. It was all run on efficiency, so there was very little stockpiling. So we kind of entered this very pressured period with very little or not enough rather, stockpiles in order to fulfill this demand. So the increasing production has been a huge focus, and we're seeing countries reorient production, make investments. Actually, now that they have that security of demand from governments that are committing to that longer term, they're able to make that investment. We're seeing greater more extensive partnerships. We're seeing countries make those major acquisitions, and we're actually seeing it as a result in countries' stock prices as well, companies' stock prices as well. So companies are responding. It does take a long time, and we've got these issues within Europe at the moment with supply chains, talent acquisition, and there are wider issues. And these countries are now actually competing with each other because they're all increasing spending at exactly the same time. They're all wanting the same kit, so it's actually creating more pressure as well.
You compare and contrast what happens on the defence side and the civil side. You look at Airbus struggling to ramp up its production. It's short in its supply chain. It's short of engines. It's short of the necessary technical personnel to be able to do this. This is a huge challenge. Fenella, thank you very much indeed. Fenella McGurty, Senior Fellow for Defence Economics at the IISS International Institute for Strategic Studies, on what is happening with the defence story. It connects perfectly in some ways into what we're seeing this morning. How interconnected the world is right now. Where are the risks that exist? We're seeing it demonstrated quite aptly with this Microsoft outage.
And we're getting an update from Microsoft and Criti saying that they're progressing mitigation efforts for the 365 apps and services. So that doesn't sound like resolution yet, but progressing these mitigation efforts. The issue then is affecting users of those services. Some fascinating nuggets of how far and wide the impact of this goes coming through on the T-Live blog this morning. And just to mention a couple of them that caught my eye. McDonald's in Japan. So there's another sector that we want to keep an eye on. Anything in retail. Stansted Airport, you can't pay for stuff apparently. So when you're using cards, how far do the bank issues go when it comes to the retail sector? There's all kinds of fire alarms going off in the Danish capital as well, apparently, and this is causing chaos for emergency services. And, you know, a lot of these things, when you talk about, you know, the Internet of Things and increasingly attaching all of the stuff in your house to the internet, it does make you wonder, doesn't it? So those are just a couple of the sectors that we just haven't mentioned yet that are in focus this morning.
No, it's good context, especially because when we're looking at the market pricing, at least, we're only seeing that reaction in. And the Haven asks us on a macro standpoint, that risk sentiment term, we're seeing it mostly in the airlines, even though the banks are taking a pretty big hit as well on a risk-off day that we started off anyway.
This is uncertainty. This is not risk. This is uncertainty. This is hard to price. We don't know what the impact is going to be yet. This is a black swan event.
Yeah.
I think this probably ticks the boxes for a kind of black swan event. Maybe it's a grey swan event, but it certainly feels like it's at the kind of the edges of the distribution of outcomes we would normally expect. Really hard to price.
Yeah, really interesting point by one of our Asia transport reporters saying that this incident for him, this from Danny Lee, brings to mind something that happened in 2010, where an update from the antivirus maker McAfee that pushed out, mistakenly identified a core Windows file as infected and wound up disabling customers' machines around the world. But you think about how much more connected we are now than we were in 2010, and you can see why this has a much bigger impact than that would have done.
And it comes back to this whole sort of issue of single source suppliers. It's a connected ecosystem, but single source suppliers in that space, you're relying on that particular ecosystem, a problem within it, and you get a substantial problem around the world. I'm hoping that all the golfers are in the country. Well, I'm hoping that the golf continues up at Royal Troon. I'm sure it will. It's difficult enough up there already. We've got a live contest that is taking place next week. We're going to talk to Ian Poulter. Ian Poulter's going to be joining us. James Dunkley is also going to be joining us, his team principal. We'll discuss the golf story next. There's an IT element to that. They've all got big sponsorship written across their shirts. We'll find out next. This is Bloomberg.
operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
This is Bloomberg.
So some would argue, and this is a slight change of direction from what we've been talking about throughout most of the morning, but bear with me, that golf's not in a particularly happy place right now. And I'm not talking about how Troon is playing, because you've seen the coverage yesterday. It looks like a fairly tough place to be right now. I'm talking maybe about the differences in how golf sees its future. We've got the traditional PGA Tour, of which obviously the Open is part of that tour, and you've got the LIV tournament, the upstart, you could argue, this Saudi-backed tournament, which has caused so much consternation over the last couple of years. You've got the Open taking place this weekend. It started yesterday. It's going to rain again this morning. Next week, you've got the JCB LIV tournament, which is taking place here in the UK. Let's talk more about this and talk about these kind of different styles of golf that now exist and kind of where we ultimately see this story going. I'm joined now, which I'm really excited about, by Ian Poulter, the co-captain of Team Majestics and the team principal of that team, James Dunkley. Fellas, thanks very much indeed for joining us. I want to talk about what is happening up in Troon. I want to talk about the golf in just a moment. James, first of all, I think a lot of people are going to be wondering this morning, is everybody here? Is the team here? Can you make sure everybody gets here? A lot of airlines have been grounding flights this morning, and I'm slightly concerned the team won't be all assembled by the time we get to next week. Are they all here? Can you confirm that for me?
3 of 4 are in the country, or in Britain certainly.
Excellent.
2 of our players, Henrik and Sam, are up playing the Open at Troon, so enjoying the challenge up there. Ian is in his back garden near Woburn Golf Club, his home golf club, and I think Lee Westwood is currently in France on holiday. So we're either here, or I think we'll be able to get here by some mode of transport before next week.
Excellent. I'm looking forward to watching it with a great deal of enthusiasm. Ian, let's talk a little bit about where we are with this golf story. We've got the PGA, we've got LIV. There has been consternation and conflict, you can argue, between these two tours. And as golf fans, we're all hoping that at some point soon we're going to see some degree of resolution. When does that happen?
I don't have the magic date of exactly when that's going to happen. Since June 6th last year, obviously, the two entities trying to bring golf back together in some way, shape or form. I think we're all kind of eagerly awaiting more news from the powers that be within the PGA Tour and obviously with inside LIV Golf of how it's going to blend itself together, what that potentially could look like. But first and foremost, it's good news. I think there is progress that's continuing to happen. But I think, when you look at LIV Golf, when you look at where and what we have done from a global perspective, 14 events is doable to blend into the season, not conflict as much with the PGA Tour. I think there's opportunity. So hopefully for the fans, there is some form of collaboration where we can all coexist. And you know, from an investment perspective, that's a different question altogether.
James, Ian talks about the fact that we can blend this together. Just compare and contrast the experience as a golf fan that I get from these two competing tours. I spent yesterday afternoon watching what was happening up in Scotland, the traditional format, but you guys have obviously got the JCB coming up next week. As a fan, can you compare and contrast the different experiences that we're getting? Because these two side-by-sides obviously kind of operate as a great example of the kind of different experiences that I'm potentially going to be getting.
Yeah, I think we've been clear from the beginning with this that these two products are very different. Majors are, you know, the pinnacle of golf, 4 rounds of tournament golf, completely individual, a very intense atmosphere. Live, it's still intense. The competition is huge. The fields are really strong. But I think why we were excited about getting involved in Live was that it is a more accessible, more relaxed environment from a tournament perspective. So what we see is much more families coming together to enjoy tournaments, you know, music playing in the background. So if you're bringing your children along, you don't have to be worried about them stepping or coughing at the wrong moment when someone's hitting a shot. So it's just a more welcoming, more accessible environment. And the average age of the people that are attending tournaments is about 25 years younger than what we see on some other tours, which I think is really important for the future of the game, to make it a more accessible, welcoming environment for people that are not just huge golf fans and have been so for a long time, but are new to the game and trying to be exposed to it in a different way.
Ian, I guess one area that you could argue there is overlap between these two formats is with the Ryder Cup. It's a team sport and it works really well and everybody gets really excited about it. I have to ask, Ian, I've been waiting. I think you've probably been waiting. Is Ian Poulter going to be a future captain of a Ryder Cup team? When does that happen? And do you think this issue between Liv and the PGA is going to get in any way in front of that?
Look, one day I would love to, you know, be captain of Ryder Cup Europe. I think, you know, what I've done and played, the amount of Ryder Cups I've played in the last 25 years, I think, you know, it would be amazing for me to do that. Currently, I'm not a member on the DP World Tour, so that would restrict me from doing so right now. There are fines which currently I'm not prepared to pay. So providing there is a level of coming together, then that would help. So, you know, hopefully...
Fantastic. Ian, James, I've got to leave it there.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Banks, airlines, even the London Stock Exchange are suffering technical glitches this morning as Microsoft reports an outage across its online services. In the United States, United Airlines, Delta, American, all grounding flights globally. We are seeing a huge disruption in the airline sector around the world. Plus, Donald Trump outlines his America First policy as he accepts the Republican nomination, detailing the assassination attempt upon him. Pressure is mounting on Joe Biden to bow out. We're going to talk about that. Let's talk about what is happening with these markets and figure out exactly the ripple effect from the Microsoft story into what is going on. And as you can see, you got red across the screen. Some of this is related to where we were with the United States yesterday. Some of this is related to what we're seeing in terms of the outages today. It's 9 o'clock here in London. What that means basically is that you are going to now start seeing pre-market trading over in the United States. I'm just trying to get us a handle on what is happening here. CrowdStrike is already down by 14%. We understand that this could be a software upgrade coming out of CrowdStrike impacting the Microsoft 365 platform. Microsoft is down by 2.5% at this point. I want to take you into what is happening with the US airline story as well. As I say, there was a ground stop issued earlier on by the major US carriers. It's not just limited to the US carriers, but the US carriers have issued a ground stop this morning. I got United Airlines pre-market unchanged. We'll see what happens there. No, there's a better price, maybe a more realistic price. We're down by 1.2%. American Airlines looks a little soft, but Delta's down by 0.9%. We'll see what happens with American when we get an upgrade on that. European airlines are under pressure as well. We have seen impacts across Europe in terms of the impact that this 365 outage is having. Ryanair's down, Lufthansa's down, Wizz is down, IAG is down by 2.5%. The issue here is that once you start getting aircraft out of position, it has a very long-term effect. So we're going to figure out exactly what the effect is going to be over this weekend and what impact ultimately is going to have. But this, in some ways, we don't really understand the full parameters of what is going on here. So we're going to work our way through the next hour and try and figure out exactly how that happens. So let's get started with that process.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
2 minutes past the hour, lots going on this morning. Welcome to The Pulse this Friday. I'm Guy Johnson. I'm in for Francine Lacqua. Let's kind of go around the world and go around the sector story and try and understand the impact that this Microsoft outage is having. Sam Unstead joins me around the table to give us the effect into the banking sector, into the broader industry story. But absolutely the center of this outage story this morning, and the area where we feel like we're getting the biggest effect is within aviation. Bloomberg's Benedict Campbell joins me now from Berlin. He leads our aviation coverage. Benny, talk me through the impact here. Talk me through what we know. Talk me through the scale of the outages that we're seeing. I've never seen anything like this before.
Yeah, you're absolutely right. And we've both covered this industry for long enough to have experienced outages. You know, there was one in the UK last year with NATS. There was one in the US at the start of last year. These things happen, but as you said, they don't happen on this kind of scale. That's unprecedented. And it's been really cascading around the world. It's now hit, solidly taken root here in Europe. Airports like Berlin are down. KLM, the airline in the Netherlands, they've said that they are disrupted. Ryanair, really across the board, wherever you look. Interestingly, some of the airlines in the Middle East, some of the big ones like Emirates or Dubai Airport, so far say no issues. That might change as this is a fast-moving situation. To your point, well, where does it lead us? It will create sort of a cascading set of chaotic scenes in the next couple of days, because as you said earlier, a lot of these aircraft will have to stay on the ground or land in places they shouldn't have landed, i.e. airports they shouldn't have been, and that puts them out of position. So getting that system, that very finely tuned system, back together again, that's going to take many days. I was due to fly to London tomorrow for the Farnborough Air Show that happens next week that we'll both be covering. So that'll be interesting whether by then things are back to normal, but this is not a short-term blip.
Yeah, we need you for that, Benny. I'm hoping that we can find another way of getting you here, because that's kind of important to me personally. Talk to me about what this, though, tells us about the strength of the systems in which these airlines operate. This is an industry that traditionally has been not particularly good at IT. It operates with long, kind of, and old legacy systems. Does this tell us that kind of that vulnerability still exists? And how much effort has been made over the last few years to try and remove some of this vulnerability? How much better is the airline industry at IT? Because it doesn't feel like it is this morning.
Yeah, I mean, that's a topic that will invariably come up. It's probably too soon to say at this point, but you know, this is a topic of continuous debate. When we had that NATS outage last year, there was really a lot of angry messaging directed from airlines at air traffic control. We know that some airlines have, as you said, fairly outdated IT. Some of them are upgrading it. BA, for instance, they're pumping billions into their systems. Sometimes you will notice the effect with a creaky app or something like this. This is obviously far more fundamental, but these things take time. There's taxpayers' money involved. In the US, the FAA is involved. This is a system that moves slowly and is also built around safety. So if something goes wrong, typically what happens is the system grinds to a halt just to keep everyone safe. So what you're seeing now with United, with American, with Delta, that these planes aren't taking off. Obviously, they'd be safe to fly, but this is a system that aims to be as safe as it can and takes these extra precautions. Annoying for us it might be, but in some ways, in a weird way, it shows that the system, that the way it's set up is working, that it's slowing down, that it's grounding to a halt.
Sam, let me bring you into the conversation. Where else are we seeing the effect?
Well, I think airlines is by far the most prominent, right? So there have been, when we were looking at Down Detector this morning, there were lots and lots of different companies on there. It doesn't look like there's too much of an effect elsewhere, but that will probably develop as the morning goes on. Just as I got up from my desk, and Benny will be extremely aware of this, but there was airline after airline after airline after airline saying that they're experiencing disruptions and IT issues. Yep. So that's the key area at the moment. One thing I want to pick up on, actually, and there's a really nice post on the live blog that we have covering this at the moment, about how important this is on the cybersecurity front. So, Guy, you mentioned CrowdStrike at the beginning. They're getting hit very hard in US pre-market trading. They have confirmed that there was an update to their system that they are now rolling back to try to end these
Reset
issues.
The system.
Yeah, effectively. But that has hit all of Microsoft's 365 systems, and that's where you're seeing this problem. With cybersecurity, those software systems have to go very deep into the stack. They have to be extremely deep and have access to almost everything. So when they go down, which is quite rare, it has a huge impact across the whole IT system. And in this case, it appears to have hit effectively all of Microsoft 365, and that is one of the major providers in the world.
This shows how interconnected we are. This is kind of the airline sector is emblematic of that this morning. You're seeing these issues around the world. During the pandemic, we had supply chain constraints. Is this just another example of concentrated supply chains, single source suppliers? And that is something that ultimately businesses are going to have to resolve and go to multiple suppliers in order to maybe deal with this. Is that even possible?
Well, I mean, that's a really good question, because to do it on this kind of scale is very, very difficult. So you're right, that market is now really almost completely dominated by 3 or 4 large companies, the cloud market and cloud storage market. And so when you do get an issue, it does spread incredibly widely, incredibly quickly. And so, that exact question that was being asked, particularly at the beginning of the pandemic and then really through it as we started to open again, is that concentration of supply chain. And if that supply chain goes down, how much of an impact that has.
Sam Munstead and Bloomberg's Benedict Campbell joining us out of Berlin. Both, thank you very much indeed. I'm very much hoping that Benedict finds a way to get to London this weekend. Monday morning, the Farnborough Air Show. I suspect this is a subject that is going to be absolutely dominant at that show when we discuss what is going on in this industry. Some great coverage lined up, some great guests lined up. I hope they all make it to the show. Let's get more on what is happening here. Natalia Lipikina, head of EMEA Equity Strategy at JP Morgan Private Bank, joining me on set. Good morning.
Good morning.
So I was, as you sat down, thinking about kind of how we were going to start this conversation. The pandemic taught us many things. Taught us about supply chains. Taught us about inflation and how supply chains can affect inflation very, very quickly. Talked to us about concentration of risk and maybe how investors need to sort of have diversified portfolios to kind of manage some of that diversification risk or concentration risk. As you see this story developing, how does it fold into your thinking about how we should manage our money, how we should think about where we invest, how we see financial markets developing? Is there a relationship between these two?
Yeah, the news this morning are definitely impacting the sentiment in the markets, but it's very difficult to understand what the real impact is. And we're still digesting the news. In terms of the JP Morgan Private Bank Outlook, which we recently launched, the mid-year outlook, our title is A Global, Strong Economy in a Fragile World. And this is exactly what we're seeing right now. There is definitely a need for the investing into infrastructure, either digital or physical. And I think the news this morning is just highlighting that piece even stronger.
But it highlights as well the kind of the concentration risk that we have. We've spent a long time trying to understand supply chains. Now we need to maybe understand kind of how the connected nature of the IT setup also folds into that narrative. Do we need to think, is this something that is going to further fragment the way that business operates? The fact that maybe you need to see multiple source suppliers, maybe multiple IT systems, because all of that has the effect that we saw from supply chains in the pandemic, and that is inflation. The more we need to harden our systems, harden our supply chains, the more inflationary they become, the more costly they become to run. Is this part of that same narrative?
I think it's still very early to tell what exactly the impact will be, right? This is definitely a fragile world. We are the long-term investors. We need to see, how earnings are playing out through the long term. We've been talking about, the rolling earnings recession going into rolling earnings recovery. This is what we're seeing so far. US market is showing 9% of earnings growth. And if that happens, that will be the largest growth.
How much of that's coming from the technology sector?
A big part of that, but what you're seeing is the rest of the market is also catching up. And I think a great example of that has been a rotation that recently happened into the mid-caps in the US. And this is also one of the areas that we're at Private Bank like right now. Because if you look into mid-caps, they actually have underperformed in the last 2 years.
Massively.
And they also had the earnings recession that hit much harder than the large caps. And I think what we're seeing today will probably emphasize that even more. We may have a bit of volatility in the market, and with the market expecting the potential upcoming Fed cuts, the market will look through into the other areas of the market that have underperformed.
If we see the other areas outperforming, does the index go up or down?
We still see upside, single to mid-sized upside on S&P by the mid-2025.
Because some big technology names have led this market. They have contributed for a massive amount, the upside in terms of the index points gains that we have seen in the S&P and the NASDAQ, obviously. If they start to fall by the wayside, if we don't see those companies delivering, and we'll come on to whether or not those companies do deliver, from a share price point of view, how do I play this? Do I buy the S&P equal weight versus the S&P? How do I make that trade work if the technology stocks are going to come off the boil and we are going to see the rest of the market performing better?
We still continue to like S&P, as I mentioned before. What the market is focusing right now is big tech is to report in the next 2 weeks. The market is waiting to see the confirmation that those companies are delivering. We need to hear about AI. And we need to hear about the capital investment that those companies have been talking about for the last quarter. This is what the market is now waiting to see, the confirmation that those earnings are coming through. And if they're coming through, we don't think that there will be a big pullback in the market.
What about Europe? And let me just kind of think about the political angle of all of this as well. We're seeing political chaos on both sides of the Atlantic. The European economy feels like it's got a little bit of traction at the moment, but not that much. Where do I want to invest geographically right now, and how does the political story impact what you're thinking about on that front?
So Europe has underperformed slightly since the beginning of June compared to S&P.
Yep.
When we look into the earnings season, the market is expecting 4% earnings growth, which is, by the way, the largest in the last 2 years. We're still very early in the earnings cycle right now, but what we're seeing is the price is a bit underwhelming. Some companies are underperforming. To us, that means that there are loads of alpha opportunities in the market, in different sectors.
Yep.
Industrials,
but you've got a stock pick.
Industrials, that are focused on the data centers, or the luxury names, or the technology names, or companies in the healthcare. We call them European national champions. So the companies that are based out of Europe, that have international presence, some of them have underperformed. We think this is where the market should focus on.
Natalia, nice to see you. Thanks for stopping by to see us. Natalia Lipicina, Head of EMEA Equity Strategy at JP Morgan Private Bank. Thank you very much indeed. Coming up, we're going to talk more about Donald Trump. The first address since his assassination last night. What have we learned from that address, and where are we going? Who's he going to be facing in the November election? Joe Biden facing mounting pressure to exit the presidential race. We'll talk about all of that next. This is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit Search Go to find answers now.
When I woke up this morning, the story I thought I'd spend most of my day talking about was the RNC convention last night. Donald Trump addressing the Republican National Convention, recounting harrowing details of the assassination attempt on his life a few days ago.
If I had not moved my head at that very last instant, the assassin's bullet would have perfectly hit its mark, and I would not be here tonight. We would not be together.
Donald Trump accepting the nomination. Who's he going to be facing in November? At the moment, we think it's Joe Biden, but that story feels like it's developing at a pace at the moment. So we need to discuss all of this. Stephanie Baker joining me around the table to do just that. Let's start with Donald Trump. This has been a slick RNC. It has felt like a united RNC. How different was that to what we would have expected even 6 months ago?
I think it's hugely different. Let's face it, Donald Trump has staged one of the most remarkable political comebacks, in my memory at least. He started off his speech last night sounding like a different Donald Trump, you know, touching on these points of unity, recounting his harrowing assassination attempt, but then he veered off script into these rambling attacks. He called former House Speaker Nancy Pelosi Crazy Nancy. He talked about an immigrant invasion. Yep. He talked about, the economy in decline, which is patently false. So if he could have stuck to the script of that unity, I think he would have been unstoppable. I think the unity you did see at the Republican convention is in stark contrast to what we're seeing in the Democratic Party, which is just riven by divisions. We can't imagine a Democratic National Convention as unified or energized as this.
Yeah, and you wonder whether the unity we saw in Milwaukee is now going to have a big effect in terms of how the Democrats kind of play what they do, see what they do next in terms of Joe Biden. We now know it's Donald Trump and Vance. And who's on the other side?
Well, it's moving quickly, and I think the fact that the Republicans showed such a united front may have sped up the process. There's talk that he could perhaps announce, that he's backing Kamala Harris even this weekend, possibly early next week.
Does the COVID diagnosis affect that, do you think?
I think it does. He's isolating at home. He's not able to come out and give a big speech. He's still saying that he's not dropping out because as soon as he gives any hint that he's doing that, he's done. But the fact that these big political figures are no longer denying that they have come to him and said, we don't think you have a path to victory, I think that is significant.
It's the Obama intervention. That's what's been kind of reported over the last 24 hours. How significant, because that's the one I've been waiting for. He's never really come out and backed Joe Biden in the way that you would have anticipated a few years ago. But the fact that he's now sounding cautious, Obama's a huge figure within this party.
He is. Remember, however, it was sometimes a tense relationship between Obama and Biden when he was vice president. So that's not exactly the figure I think would influence him, Biden's thinking. I think Nancy Pelosi and Chuck Schumer are far more influential. And the reports that I have read, Pelosi, reading out alternative polls showing he does not have a path to victory, that some of the swing states he's falling behind in a way that looks like he can't pull ahead. I think that is far more significant.
Stephanie, we're going to have an interesting weekend on this one, and then potentially early into next week. Stephanie Baker joining us on the latest on US politics. We'll continue that conversation around 50 minutes' time. Kim Darroch, the former British ambassador to the US during the Donald Trump first presidency, will be joining us. We'll get his take on what is happening here. We also need to keep you up to speed with what is happening with this global IT outage, grounding flights around the world. It's taking some TV stations offline. We are still online. You can continue to get an update on what is happening here. This is Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
The IT outage is having an effect on global markets. Let's take a look at where we stand currently with US futures. We're a way away, obviously, from the start of US trading, but as you can see, it's a negative story. Remember, we sold off into the close yesterday as well. Let's run through some individual names. Microsoft, CrowdStrike, this is the epicenter of the action this morning. Let's take a look at how they're trading pre-market this morning. They are soft, and as you can see, CrowdStrike very much under pressure this morning. Before I let you go, quick look at some of the airlines as well, maybe to give you an idea of what is happening on that front as well. It's having an effect. We'll continue to monitor it. This is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper. I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday. Bloomberg covers the world with unmatched reach and resources. From more 120 countries. The moment news breaks, 24 hours a day. Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Good morning. Welcome back. You're watching The Pulse. I'm Guy Johnson in London, in for Francine Lacroix. Let me get you up to speed with what you need to know this morning. Banks, airlines, even the London Stock Exchange suffering technical glitches. Microsoft says some services are starting to improve after an outage across its online services. United Airlines, Delta, airlines globally around the world being affected by this story. This is a Asia story, a Europe story, a US story. Politics is never far from obviously what we're talking about as well. Donald Trump outlining his America First policy as he accepts the Republican nomination, detailing the assassination attempt upon his life, pressure mounting on Joe Biden to drop out of the race. Okay, let's talk about the market effect of all of this, the impact of all of this, and figure out exactly where we go next. We have seen a global outage. Microsoft is at the center of it. It looks like it's some sort of a CrowdStrike security update that may have gone wrong, but it's having a massive effect around the world. We started to see evidence of it first thing this morning with Asian airlines and check-in problems. It's now spread to Europe, to the United States. We have a ground stop on many of the major US carriers that are going to be affecting the start of the day in the United States. Craig Gupta and I have been kind of monitoring this story as it's begun to develop throughout the morning. So Microsoft beginning to say that things are improving?
They are, and they've been saying that from the get-go. Remember, this initially started overnight in Japan as well, when that was the first reports that were put out. And they said the issues in that region were resolved altogether. Then it kind of got bigger when we're talking about the 365 apps, and then they are still waiting to fully resolve the issue from there. But they are saying that some of their services, I believe, quote, continuing to see improvements. Look, we don't know how much of this is specifically related to the outages we're seeing in the airlines, the stock exchange, the delays in banks as well, or even the fact of what CrowdStrike is seeing, what's happening as well. Are they connected issues, or are they just really poor timing? We still don't know those details.
We don't know those details, but what it flags once again is the interconnectedness of these systems, which are only going to get more pronounced, you could argue, and the concentration. There's only a few cloud providers around the world, and you see the impact of one of them potentially having an issue.
We do, and to your point, the kind of big scare factors, if you see the likes of Azure, this is regarding Azure specifically, the Microsoft offering, see AWS go down as well, then suddenly the entire world is affected. If you look at it from a regional perspective, you're only seeing about 3 out of the 5 domestic airlines in the States right now call for the FAA stop, but you're seeing a much bigger kind of impulse in Europe, in Asia, yet of course we're still waiting for the rest of the United States to wake up, so we'll see what the broader spread of it looks like. But if we're looking at a roadmap from the last time this happened in the aviation space, it was with Southwest Airlines. It brought up these kind of tech issues. It brought up this infrastructure issue. And it took about a week to resolve the entire system, not just Southwest.
Yeah, it's 4:30 a.m. in New York right now. I guess we'll learn over the next kind of few hours the impact that this potentially could have as some of those systems come online. It does. You and I were discussing this earlier on. In some ways, there are parallels with the pandemic.
Yeah.
And the concentration of risk, the supply chains, the single source suppliers. And I wonder whether that's once again going to be the takeaway from this.
It could be, and I think what's a little bit scarier here is, look, this is coming into a time when so many companies are feeling the pressure, especially to accelerate not only into AI, but specifically into cloud as well. Remember, this is a 10-year-long process. A lot of companies around the world still haven't fully integrated into cloud as well, and this is kind of a fear factor to show that. But in the process of doing that, they've also been amping up their cybersecurity piece, because since the pandemic, we've also had 2 wars in this region alone, and this is something that people are really trying to talk about from an infrastructure point of view, but a security point of view as well. And I'll caution that statement by saying that, first off, CrowdStrike is a cybersecurity company, and second, in this particular instance, it doesn't look like there's any early signs of some sort of cyber attack or kind of terror threat or anything like that. But it is going to bring up those questions. Yes, exactly.
In terms of what we know, is there any historical precedence? I've been trying to figure this out this morning in terms of, you talked about how long the airlines have taken to get back online. We have seen outages with updates in the past for big IT systems. The scale of this thing the system feels like it could take a while, though, to resolve. They're saying it's improving, but do we get a sense of kind of, do they have a timeline at this point? Have you seen anything?
We haven't seen a timeline yet, but I think to your point, talked a lot about the airlines, but this is where financial services really comes in handy, because when this news first broke, yes, the airlines took the brunt of the hit, but you had the likes of HSBC, Barclays, Standard Chartered taking some of the biggest hits as well. When we saw the market open this morning, it took a few extra minutes for those trades to come in. The index level didn't open until far later than some of these individual stocks. So we're still waiting to see what the financial repercussions are as well. I believe we have some our print colleagues doing some reporting as well on what those implications are, where the delays are coming from, and whether this does actually affect those trading updates, because that's what you're going to see come in full force over in the States when more of those traders hit their desks.
It's fascinating, isn't it? But you put airplanes out of position means people out of position.
Yeah.
So there's going to be loads of people who normally would be attending meetings, going to various events, doing all kinds of things that they need to do around. None of those people are going to be traveling, and it's going to be really interesting to see whether or not there is a read across from this into the data that we start to see over the next few months, and into the economic numbers that we're going to be watching quite so carefully. I don't know yet. It's going to be one of those extra kind of left field factors that we need to fold into our thinking.
Yeah, and I think you made a key point there, is when you talk a lot about business travel, people usually come back on Fridays, and so this is when you see these outages, those delays are going to show up throughout the weekend as well. I'm curious to see, we talked about the banks, we talked about the airlines as well. I'm curious to see what retailers are affected as well.
Yep, that's true.
McDonald's was, I think, one that had come up in conversation, some of their international chains as well. But if you're talking about those IT infrastructures, this is why the U.S. needs to wake up and see what the damage is being done here, because this does, of course, have a massive effect. But the retailers will be interesting because, of course, the consumer base is much larger in the States than it is here.
Yep, you walk into a McDonald's these days, the two are probably connected, like it's all on a big screen, and that's how you order.
No Egg McMuffins for you.
I'm hungry now. Kriti, thank you very much indeed. Kriti Gupta on the latest. We'll come back to this story and keep you up to speed as it develops. As I say, 4:30 in the morning over in the United States. We'll see what effect it has. Let's get back to the UK economy now. The Chancellor, Rachel Reeves, warning of, quote, difficult decisions ahead as she tries to fix Britain's public finances. The country's first female Chancellor joining Bloomberg's Francine Lacroix for an exclusive interview. This, of course, after the Labour Party's landslide election win earlier this month. Francine kicked off by asking her about support from big investors.
That is absolutely crucial, because there's no plans that I can draw up in my new office in the Treasury that are going to work unless we have business buy-in. And I hope that businesses saw in Labour's manifesto, and also in the plans that we've announced in government, have the fingerprints of business all over them, because these plans have been co-written with business, because they're all about unlocking private sector investment into our economy.
Chancellor, are you considering tax breaks to either boost pension savings or make UK investments more attractive?
I'm not going to announce any tax breaks or tax changes without saying where the money is going to come from. And we will have a budget later this year. But I also just need to be really clear and honest about the scale of the challenge that we've inherited with the public finances. We're going to have to make difficult decisions. We need to fix the foundations before we can start rebuilding things in Britain. But unlike the previous government, I am going to be honest about the scale of the challenge. I'm going to level with people, and together we're going to rebuild our country based on that private sector business investment to get our economy growing. Because I asked the Treasury officials to give me an assessment of how much stronger the UK economy would be today if we'd have grown at just the average rate of OECD economies these last 14 years. And the answer is we'd be £140 billion bigger today.
The Chancellor of the Exchequer, Rachel Reeves, speaking exclusively with Francine yesterday. We're going to stay with politics. Coming up, Donald Trump basking in total control of the GOP as Joe Biden's candidacy continues to face serious questions. We're going to be speaking to Kim Dow, the former British ambassador to the United States. He served during Donald Trump's first presidency. We'll have that conversation next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Could face bigger challenges next.
Fed was going to keep rate World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
a.m. in New York. It'll be waking up soon. Does it ever sleep? But I suspect that this morning will be a rude awakening. The reason for that, what we are seeing with this global IT outage, yet fully, I suspect, to be baked into the United States. At the moment, futures are quite negative. I wonder whether they get more negative. There are some key stocks that are under significant pressure this morning. Microsoft is down. It is causing, you could argue, the problems this morning, but at the epicenter of the story is actually potentially CrowdStrike, the cybersecurity company. It looks as if this may have been caused by a CrowdStrike update. We don't have the details. I'm not pointing any fingers at this point in time, but we are watching very carefully to see how quickly the situation can be resolved. U.S. airlines, a number of them have issued ground stops this morning. We'll talk to Sidharth Philip in just a moment from our aviation team to get an update on what is happening here. But we are seeing some of the U.S. airlines under pressure as a result of this. Remember what we saw with Southwest. It took about a week to fix this. This could have a significant impact on U.S. travel over the next few days. Let's turn back to what is happening in the United States, but from a different perspective. The U.S. political situation and how it is developing. President Joe Biden's grasp on the Democratic presidential nomination appears to be slipping from his grasp. This as he weighs increasingly public warnings from his party's top lawmakers. Perhaps the harshest blow, a Washington Post report that former President Barack Obama has told allies that Biden's path to victory has been greatly diminished. He isn't the only one. Nancy Pelosi, Chuck Schumer are in the mix as well. How does this develop? How does this compare and contrast as well with what we've seen out of the RNC over the last few days, which has been a story of unity? Joining us now to discuss all of this, the former UK ambassador to the United States, Kim Darroch. Kim, nice to see you this morning. Thanks for the time. Let's start off, actually. I want to get to Joe Biden in just a moment. But first of all, your thoughts on what we saw at the RNC and what the message is from the rest of the world from that gathering.
What it mostly reminded me was just how different American politics is from British, European politics. I mean, all the hoopla, the theatre of the whole thing, the run-up to the Trump speech, then this marathon 93-minute speech from him, of which the first 20 minutes, the stuff about the assassination attempt, I think will have riveted the TV audience. The rest of it was rather like his campaign speeches, his stump speeches, and quite rambling, and some of the most extraordinary claims in it that would have been ridiculed in the UK, but which in that kind of forum, with that kind of audience, you can get away with. So it's a very different event. And it was, as you say, a very, very united conference and a coronation for the second Trump attempt at the presidency.
If I'm sitting here in Europe and I'm trying to understand the implications, are the implications that we are going to see a more isolationist America? Are we going to see a more Asia-focused America? Is Europe going to have to spend more on its defense?
Well, if you add into what Trump's positions are, the appointment of J.D. Vance as his vice president, and Vance's even harder line on stopping aid to Ukraine is even more, as it were, isolationist and unilateralist, then that's the way it looks. Trump is nothing if not unpredictable, so we would have to wait and see how it unfolded, and European leaders would have to make the best shot they can at arguments from dissuading him from some of his ideas, like leaving the Paris climate change deal, like stopping military aid to Ukraine, and his disdain for NATO. But certainly there are worrying aspects of his policy pronouncements, foreign policy pronouncements, that would suggest a difficult time for Europe, and Europe having to do, as you say, a lot more itself.
Is Europe prepared? Is Europe prepared for Trump 2.0? And is Europe more vulnerable to a Trump presidency than it was, a second Trump presidency, than it was when it comes to the first one?
In terms of preparation, Trump's been ahead in the opinion polls, only a couple of points or so, but basically ahead all year. So Europeans, the government, people in government in Europe have been talking for months now about the implications of a Trump presidency. And that gap has widened since that disastrous debate performance by Biden. It's now 5 points, I think, in some polls. So people will be thinking about that. Are we prepared? I mean, and is the situation more dangerous? Yes, it is. It is because you now have war in Europe with the war in Ukraine, the Russian invasion of Ukraine. You have conflict in the Middle East, and you have rising tension with China. So at a moment when US global leadership, you could even say, is more called for than ever, we have the potential risk of a rather unilateralist and isolationist America. So yes, these are dangerous times.
Do the Democrats have a candidate that can beat Trump, do you think?
Well, this is obviously very speculative. I feel myself that Biden can't beat Trump on the basis of his performance in recent weeks, and that the risk for the Democrats is something approaching a landslide. A state like Virginia, which should be solid Democrat territory, is currently showing a 2-point lead for Trump. So it wouldn't just be Democrats losing the battleground states, but more as well. I think they have 3 or 4 candidates who can do better against Trump than Biden could. I think Gavin Newsom, the governor of California, is a very effective politician. Gretchen Whitmer in Michigan is a very strongly performing governor there. You have Josh Shapiro in Pennsylvania, another swing state, where he is doing well as a Democrat governor. And then you have, obviously, Kamala Harris. So I think there are 3 or 4 names there, all of whom some polls suggest do better against Trump than Biden.
Is the outcome different from a European point of view, depending on who wins? How big's the spread between how Europe deals with the next American cycle if there is a Democrat in the White House versus a Republican in the White House? Even Joe Biden has taken a very, very strong line on issues like China and has felt that the Europeans have not supported him in that effort. How different to the United States are we going to see regardless of who wins?
You're absolutely right. 2 points where whoever wins, there isn't going to be much difference. One is China, where there is a consensus across the national security community in America that China is the existential challenge for this century, and where whoever is in the White House, there will be pressure on Europe to do more, to challenge China, to stand up to China, maybe to introduce trade measures or sanctions or this kind of thing, depending on China's behavior. The second is just international trade, global trade. Biden is no free trader. Trump isn't. Biden's kept on most of the tariffs from the Trump first presidency, and Trump would increase them. So equally on trade, there are going to be difficult times. But then there'll be differences over NATO and over Ukraine. So there'll be some divergences and some similarities.
Kim, thanks very much indeed. Thank you very much for your time this morning. Kim Darroch, former UK ambassador to the United States. Greatly appreciate your insight. I want to come to another story that is worth noting this morning. The Interfax News Service is reporting that Russian prosecutors are seeking an 18 10-year sentence for the Wall Street Journal reporter Evan Gershkovich. Gershkovich and the newspaper have denied Russia's accusations that he was spying for the CIA. It is the first time since the Cold War that Russia has tried a U.S. reporter for this crime. The trial is taking place behind closed doors, and a verdict is expected later today. Now, coming up, we'll come back to what is happening with the Microsoft outage. The aviation industry is being hit hard. The vacation season is getting fully underway. We are seeing an impact across Europe and the United States. We'll have the latest next. Philip is going to join us from our aviation team. That's next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Back to our top story, the technical issues that we're seeing around the world. Transport being affected. We talked mainly this morning about what is happening with the airline sector, but the port of Rotterdam this morning, I think it's Europe's busiest port. I could be wrong about that, but I'm pretty certain it is. Some firms in port are being impacted by the outage. Heathrow Airport this morning, flights are operational, but contingency plans are in place. It's affecting other areas of the aviation sector more severely. Let's get an update on what we know, what we don't know. Philip joins us now from our aviation team. What do we know, Sid?
So at the moment, it's affecting airlines differently, but it's affecting airlines across the world. And so we're seeing airlines from United Airlines, Delta Airlines, to carriers like Lufthansa, Ryanair, and even Indian low-costers like Indigo and SpiceJet. So across the board, across the world, we've seen a massive impact from this outage. In the US, it's been particularly hard because airlines like Delta, United, American Airlines, they've all put in ground stop notices that basically mean all operations are suspended until they can get a handle on things. Whereas in some cases in Europe, flights are still operational, but either airports are affected or booking systems and check-in systems are affected, and so airlines are having to manually check in passengers, sort of going back to the pen and pencil, the sort of method of checking in carriers, and that's sort of affecting carriers in terms of flight delays, cancellations, and others.
I see American's just cancelled its ground stop. So maybe things are starting to become a little bit more clear. That's the latest out of American Airlines. As you can see, its stock pre-market is up by 0.4%, but we do see other ground stops. The problem is, as soon as you stop flights taking off, landing, people checking in, everything gets out of position.
Absolutely.
And we've learned this in the past, that takes, and you saw it with Southwest, it takes a huge amount of time to resolve that.
Exactly. I mean, the ground stop is the easy bit because you've sort of stopped aircraft. But the difficult bit is actually getting operations back on track and getting things back in position. I mean, obviously, as you mentioned, that for airlines, every operation is sort of time-bound. So if an aircraft is in a certain place at a certain time, it needs to leave a certain place at a certain time in order for it to make the next destination. And so for the airline industry, getting sort of resilience and there is very little buffer in the system, and they need to be able to get the aircraft in the right place. They need the crews in the right place, and then they need to get the backlog cleared. And that's what takes a long time for the airline industry to sort of get things back on track.
Have you ever seen anything? This is global. I've seen this regionally, but I've never seen this globally.
Yeah, we saw the NATS outage in the UK that affected the UK carriers. We saw the FAA issues that affected the NOTAM issues that affected US carriers. But this is a global issue, and I mean, there's nothing been like that for a while. And especially as airlines sort of get more interconnected and they sort of use more sort of cloud systems and they use more sort of much more complicated systems. I mean, it gets more and more complicated for them to get things back on track, and it's going to be interesting.
Well, we've got the Farnborough Air Show on Monday. It'll give us certainly something to talk about. I'm looking forward to that coverage. Okay, that wraps things up. The Bloomberg Brief is up next. Danny Bergman, Manus Cranny, they've got something to talk about this morning. This is Bloomberg.
The linear business is not going anywhere. The sports business is moving and is going to figure itself out between digital and linear. It's an unbelievably healthy market. They all have to be in it. They all want to be. Every single one of the players want to be in it because of the audience. We have two assets in the sports business that are year-long, don't have a season. I don't believe prices are going down. You're going to figure out the bifurcation of the rights and give things up, not give things up.
How long do you think it is before Netflix actually jumps into sports?
You know, they're in sports right now, but they just do the shoulder programming.
Yeah.
I think their point of view, and you'll ask Ted tomorrow, is we build up we don't want to be in the bidding of rights and then not have any long tail. So I'm not sure. They did bid on Formula One, but ESPN got it. So I think that was a smaller package, meaning smaller economics. So we'll see.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
This is Bloomberg.
Good morning from our global headquarters in New York. I'm Danny Berger. Manus Cranny is off for the week. Welcome to Bloomberg Brief. Let's set your agenda. Airplanes grounded, banking systems down, Microsoft and CrowdStrike outages disrupt businesses across industries around the world. President Biden faces more pressure to drop his bid for a second term. Former President Trump officially accepts his nomination as the Republican candidate. And Netflix stays at the helm. The streaming service adds 8 million new customers, beating the street's estimates and its rival. What a morning. It is the summer. It is Friday. It is supposed to be boring, but we have a new thing to contend with. That is an outage seemingly stemming from CrowdStrike and Microsoft putting things down across the world. It is affecting risk appetite down 0.2 for your S&P futures session. It fell precipitously as soon as we started getting headlines. Things like airlines, banks, even some systems around the world for things like 911 services and some fire alarm in Copenhagen are having issues. We're going to talk to our reporter about that in just a moment. Let me quickly whip through the rest of these markets. Tech doing the worst, as you'd assume, with things like Microsoft and CrowdStrike down a whole lot this morning. Meanwhile, your U.S. 10-year yield, not a lot of movement. So despite the concern, no really haven bid. We're at 4.19%. Let me show you CrowdStrike, Microsoft, and United. United not falling too much. Maybe there's an idea that hopefully flights can get back up and running soon. That's down by about 0.25%. Microsoft down 2.5%. CrowdStrike down more than 14%. So let's dive straight into this. It is a fast developing story. And Bloomberg's Sam Unstead is with us for our Markets Today blog, who's been tracking everything that seems to be going wrong across the world. Sam, can you just start? Do we know sort of what's behind this, how this really got going?
So I think actually this is something you're going to see over the course of the next couple of hours and maybe over the next couple of days, Danny, is that most of this has come from an update that was put through by CrowdStrike, which is a cybersecurity company. And what that's done is impact Microsoft's 365 services and their Azure cloud service. And this is one of the major providers in the world. So that having any kind of issue at all has very widespread impact. And then what we've seen over the course of the morning is just consistent headlines, particularly from the airline industry. So that's been really the main area where this has happened. And that's partly as well because the airline industry, obviously safety is enormously important there. So any kind of disruption, they have to take action very, very quickly. That's where you've seen the majority of the impact. Plus, as you've already mentioned there, Danny, on CrowdStrike shares, which are dropping quite a bit.
Yeah, I mean, one consultant for the airline industry told me that at Heathrow, literally no one could log into their computers on the British Airways team. So that's obviously a problem. Airlines are one of it, but what about the extent of the rest of this outage, Sam? What do we know?
Well, I mean, at the moment, we're still waiting. They are working on it. They've both confirmed that they are working to reverse the update that was put through in order to get systems back online again. So until that happens, we won't sort of have a really good indication of how much of an impact this will have going forward, because obviously the longer it goes on, the worse it becomes. You know, for CrowdStrike in particular, the reputational risk here is quite significant. Yes, if you're a security company of any kind, a cybersecurity company in this case, it's very important that your reputation is very, very good. And the other thing to remember as well is with cybersecurity systems, they go very deep into the stack. So if you're going to have a security system, it has to protect everything. So when they do go wrong, which is very rare, but when they do, it can have an enormous impact.
Yeah, this headline just coming from a spokesperson from Microsoft, Sam. Microsoft anticipates resolution is forthcoming. Let's hope things get back up and running soon. Sam, you're kind of touching on this, but the fact that this is just one company, it is CrowdStrike, it affects Microsoft, it affects the globe. What do you think this means for a global security supply chain. Some of these companies going to start to rethink things?
I think there's a possibility of that. I mean, as I say, part of it really is about how quickly it gets resolved, and that reputational risk is very significant. There is an element of this that's about the kind of concentration of supply chains. You know, the cloud industry is another where there's a high concentration to a very small number of very, very large companies. So when these things do go wrong, as we're seeing today, it has a kind of wave effect into all sorts of different industries. You know, we've mentioned airlines, but you're seeing an impact, for example, going into then cyber insurance companies because they might face some risk from this. McDonald's Japan had to shut down a bunch of their systems. There's payment systems having issues sort of all over the place. So it can have quite a long-running issue. In terms of the stock market going forward, you know, from this, airlines, you know, as that kind of shakes itself out, that's where you may see a bit more of an impact as we go. But likelihood is once it's done, it'll take a few days, if not weeks, to sort it all out and then to understand the kind of financial impact.
I'm happy to report, Sam, because Sky News in the UK, where you are, literally couldn't go on air. They're now back on air, so things may be starting to normalize. Sam Unstead, thank you so much. Be sure to keep following Sam and the rest of our global team. They are doing such a good job covering this outage. TLIV Go is where you want to head on your terminal. Joining us now is Elliot Hentov, Head of Macro Policy Research at State Street. Elliot, great to speak with you this morning. I just saw a headline that some JP Morgan employees couldn't log on. Can we just set this straight? Were you able to log on this morning okay?
I am logged on right now.
Okay, perfect. State Street is up and running. We love to hear that, Elliot. Listen, this comes at a time where there is this sense of fragility right now in these markets. The last sell-off that's happened over the past few days, it's happened everything from politics to maybe rethinking this economy. What do you make of having, again, an outage, which usually we wouldn't really think too much of, but this is a global outage affecting global industry. How does it shape your thinking this morning?
Surprisingly, it does. Well, the first thing what we want to rule out is that there was nothing nefarious. If indeed there was some nefarious element to the software update by an external actor, I think that would be very disruptive for a lot of the equity market more broadly, because it's been built on a tech rally. And if we have some existential vulnerability, that would be a major problem. The second big issue is what Sam alluded to, which is if it undermines confidence in cloud and server ability to run future businesses, to run AI models of the future, all the productivity growth that we're expecting could be slowed down because suddenly there'll be hesitation around onboarding reliance on these cloud systems.
That is such a good point, Elliot, because we are in this moment where basically every company is talking about trying to incorporate AI, some more successful than others. I know McDonald's shut down their AI ordering service, drive-through service, because people were getting things like bacon on top of their ice cream. But in this world where we're all moving towards AI, I wonder if it's almost, if we're getting ahead of ourselves, if this sort of incident shows us that our reliance on some of this technology can be an issue, especially when we're all relying on the same company, because that is happening in AI with all these companies relying, for example, on NVIDIA chips.
Yeah, I think the scary thing about the AI revolution from a macro and from a kind of systemic risk point of view is that it's the first time where the incumbents are at an advantage. So structurally, as you say, you have a real concentration of supply, and incumbents are basically being boosted by the innovation cycle. And so that means it reinforces and exacerbates systemic risk and concentration risk. And I think that topic will emerge more and more in the future.
For those of you just joining us, we're covering now a live story of outages stemming from CrowdStrike, various things like airlines having issues, some banks as well. We're speaking this morning to State Street. Elliot, the other big development that, look, if this hadn't have happened, you know what you and I probably would have been talking about all morning. It is the politics. We had former President Trump solidifying as the Republican nominee last night at the convention. Now, a lot of people, as it affects this market, has been trading as the main impact will be more deficit, will be higher deficits. And that's been things like curve steepening has been impacted from that. How much do you want to be part of that trade? How much do you see a Republican presidency and the likelihood of it affecting what you're recommending to clients?
Obviously, for the second half of this year, it is going to be a major driver because obviously anything that affects the U.S. policy mix will be key to U.S. bond markets, reserve currency, reference rates, and so forth. So it's for good reason we're all talking about it. For good reason we have to get it right. And election risk these days is not less about the presidency, but really about whether the Congress will be Republican, both houses, yes or no. Because that means you get that fiscal expansion. That means you also get that yield curve steepening, particularly with long-term yields rising on account of deficit worries. But that outcome is not certain yet. It's much less certain and much less likely than the presidential race. And there's still a lot of factors that could drive it. I would really flag here that when you take the presidential race out and look at congressional polling, it still is a very, very close race. And so therefore, getting that right is the challenge.
It's interesting because with the added pressure that Biden faced even over the past 24 hours, you had this market kind of undo some of that rotationary trade. I wonder if there's some element where you look at Biden dropping out and you say, okay, this changes the races down ballot and maybe makes it more likely, or at least helps Democrats a little bit, and therefore changes some of what you're talking about. In other words, Elliot, how closely are you following this specific development for getting an understanding of how the fiscal position might evolve?
100%. It's down to the minutia of election forecasting, because congressional results are linked to presidential race by a factor via the turnout, who basically shows up at the ballot box. And so the top of the ticket matters in terms of the trickle down. And so it matters a lot. And if Biden does exit, that does reset and rechange the probabilities of the Democrats actually retaking the House. I would actually say any other candidate other than Biden lifts the Democrats to a 50% chance of taking the House at least, and therefore reduces the odds of the fiscal expansion and the pretty radical yield curve steepening that some of the market is gradually rotating into right now.
Elliot, really wonderful to have you on this morning. We're happy to hear that everything is going smoothly. Hopefully you have no flights to catch. Elliot Hentoff of State Street. Enjoy your weekend. Okay, let's get to some of the other top stories that are trending on the terminal this morning. We have to talk about Netflix. Shares are falling in the pre-market after the streaming video giant's third quarter revenue was slightly weaker than forecast. But analysts were largely positive on the print. It did show strong subscriber additions. Netflix shares were up 32% this year going into the report, so maybe just high expectations. Chinese investors sold a record amount of U.S. stocks and bonds in May. Funds offloaded a net $42.6 billion worth of long-term securities, consisting of treasuries, agency, and corporate bonds and equities, according to U.S. Treasury data. Yemen's Houthi militants claimed responsibility after one man was killed in the heart of Tel Aviv after an explosion from a suspected drone on Friday morning. The Iran-backed group said it attacked Israel's commercial and vowed to target the city and other parts of the country again. Okay, coming up, a tale of two parties. The GOP all unites around Trump as he accepts the nomination, while the Biden campaign hits an all-time high. Later in the hour, we're also going to speak to BlackRock's Amanda Lynham. We'll speak about a lot of things, but also this outage that we're seeing across IT systems. We'll keep you up to date with it as it happens on your brief.
Multi-trillion-dollar industry. There's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg. Get your your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's your Bloomberg Brief. I'm Danny Berger. We are currently tracking the IT outage taking place across industry, across the globe. Just to get you up to speed, it's reportedly started with an update for CrowdStrike that also caused issues for Microsoft's Cloud Azure service, which lots of people use. So those shares down 17.5% for CrowdStrike. Will this make people rethink all using the same cyber security software? Microsoft down 2%. Also impacting airlines, Cathay Pacific, Delta, United, American Air, all affected. Some of them grounded. However, American Airlines has canceled that order to ground flights, according to the FAA. There are also some issues for banks, and LSE reported systems, a London Stock Exchange, earlier this morning, but they are up and running again. Of course, all these disruptions come to a very busy weekend for the July travel holiday. Let's take a look at some of those European stocks, because again, some of the first issues did affect Europe. Globally, I will say it is risk off, following on from yesterday. There's Ryanair also saying that they had issues with their systems, down 1.6%. The latest we've heard from Microsoft is they have said that a resolution is, quote, forthcoming. Also hearing from JP Morgan that some of their employees are having a hard time logging in. So that's the state of that global tech outage. Let's now turn to DC. President Biden's campaign is at the lowest it has ever been, with even more calls to step down from the presidential race. That includes former President Obama, who has joined with concerns about his bid, according to people familiar. Let's get over to Bloomberg's Stephanie Baker. Stephanie, I mean, we talked earlier this week and we said the dam is breaking. Surely the dam is breaking now.
It certainly looks like it. I think Biden's COVID diagnosis has complicated things. I think the Republican convention and the incredible enthusiasm and unity behind Trump may have sped up those calls on Biden to step aside. All bets are off. It's unclear whether or not he might step aside as soon as this weekend or early next week. But the fact of the matter is the Democrats are running out of time. They need to make a decision if they are going to change candidates as soon as possible, so those roll call votes that were due to start on August 1st can go ahead.
And Stephanie, it is really stark, this split screen that America is getting right now. On one side, you have the leaks and the disarray coming from the Democratic Party. On the other hand, you have the Republican Party. And the convention happening there is Trump, sort of the king, coming back to the stage, former President Trump officially accepting the nomination. Let's just take a listen from the RNC yesterday.
There is no victory in winning for half of America. So tonight, with faith and devotion, I proudly accept your nomination for President of the United States.
Stephanie, the language from Team Trump had been that he would change his language, that this was a different type of address after he survived Saturday's assassination attempt. Did we get a different Trump this time?
It started out as a different Trump. He was sounding presidential, restrained, focused on unity, and then he veered off script and started rambling about attacks on former House Speaker Nancy Pelosi, calling her crazy Nancy, talking in very dark terms about an immigrant invasion, talking about the U.S. in economic decline, which is patently false. He did not stick to the script. It was a rambling speech. It went on, the longest nomination acceptance speech, I think, in U.S. history. I think some people in the audience I read were getting restless and bored. It's unfortunate he did not stick to that sort of presidential tone at the beginning, and I think it indicates he probably will continue to veer off script with these attacks going forward.
Stephanie, thank you so much. That is Bloomberg's Stephanie Baker. Now, coming up, we're going to get back to the outages, the latest, more airlines reporting issues. Spirit Airline has now grounded all flights. NHS England says it is aware of global IT issues. We're going to break it all down for you next on your brief.
Names in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
I especially am afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Yeah. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Tracking a major outage across global industry this morning. It seems to have started with an update to CrowdStrike software. It's impacting most notably Microsoft Azure, their cloud business. CrowdStrike down 20%, Microsoft down 2.5%. Various industries reporting problems, from JP Morgan, where some employees can't log in, to different banks and airlines too. Let's focus in on the airline portion of this, because this is one of the busiest weekends for traveling. Bloomberg's Guy Johnson joins us now. Guy, you've been tracking this all morning. I just want to get a sense from you where we stand in the extent of the issues, IT issues that airlines are facing.
It is huge and it is significant, Danny. It started in Asia overnight. We saw problems with check-in in Hong Kong. We've seen some airlines in Australia being affected. It's migrated itself through into Asia. We've got a number of European carriers being affected. Wizz is talking about issues that it is facing. We've got some of the other low-cost carriers. We've got some of the airports as well. Heathrow is running a reduced system. We saw Berlin's airport being closed a little earlier on. One of the first things we did see, though, when I got in this morning was US carriers issuing ground stop. This basically just means that we are seeing all departures and arrivals, all basically sort of ground movements of the aircraft coming to a complete full stop. Now, American has subsequently lifted that, but we don't know what else the effect is going to be throughout this morning and how long this ultimately is going to last. I've never seen anything quite like this, Danny, in terms of the global impact that we see on airlines. And this is a hugely connected industry, and it's going to take a long time potentially to resolve. And the longer it goes on, the longer the effect will be, because you get aircraft out of position, you get pilots, you get crew out of position, and the effect of that, plus the kind of the build-up, the backlog of people that haven't already traveled, having a huge effect. So we may be almost kind of at the point where we are going to see a lasting effect from this, even if it was resolved right now, but it hasn't been yet.
And of course, Guy, this is impacting more than just airlines. I want to bring in Tom Metcalf to get the view from banks. So let's broaden out this conversation. Tom, I mentioned how JP Morgan, some employees couldn't log in, but of course there are other IT systems at issue here for the big banks, for various financial services. What has been the impact?
Yeah, basically, if you're reliant on Microsoft, you're going to be hit in some way. So, you know, some banks who for some reason don't have Microsoft exposure, as it were, are operating just fine. But right across the spectrum of finance, we're seeing issues. So, you know, some of the pricing was delayed. We're hearing some trades can't go through. And yeah, broadly speaking, it's been a sort of very disrupted Friday morning of trading.
It certainly has. Guy, can you give us an idea? Again, as Tom was saying, basically anyone that uses Microsoft has an issue. Where do we stand on that those sort of upgrades for airlines and the software they use? Because I was under the impression that a lot of these airlines actually use old software and maybe could get around things like this.
Well, I think the old software is the sort of the pen and paper that we're relying on this morning. Maybe that's where we're back to this morning, because some airlines are literally having to check in that fashion. Yeah, you're right, Danny. This is an industry that has legacy IT systems that date back years and years and years, and they have been racing over the last few years to play catch up. And now it's not all of the systems that have caught up, but clearly some of them have and have been migrated to the cloud. Now, this may be check-in systems, this may be payment systems, and we're certainly hearing a lot about payment systems this morning to draw a line to what Tom is talking about. So it may not be the entire IT suite that is being affected, but key portions of it are, and those are kind of important, and that's what's grinding the whole system to a halt.
Okay, Guy, Tom, thank you so much for those updates. That is Bloomberg's Guy Johnson and Tom Metcalf. I would really recommend going to our Top Live blog on this. They're doing a great job keeping everyone up to date. TLIV Go is where you can see that. Now, coming up, we're going to speak to BlackRock's Amanda Lynham. Hopefully she's been able to log on this morning. That's coming up on your brief.
Operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
This is Bloomberg. From our global headquarters in New York, I'm Danny Berger. Managed Cranny is off this week. Let's set your agenda. Airplanes grounded, banking systems down, Microsoft and CrowdStrike outages disrupt businesses across industries around the world. President Biden faces more pressure to drop his bid for a second term. Former President Trump officially accepts his nomination as the Republican candidate. And Netflix stays at the helm. The streaming service adds 8 million new customers, beating the street's estimates and its rivals. The top story, no doubt, is the IT outage this morning. What we know at this moment is it seems to have started with an update from CrowdStrike that has specifically impacted Microsoft's Azure. They have released a fix, a workaround, apparently, that they can do, but it's kind of an old school thing that you need to do. So does risk off across these markets. Here's the individual impact. CrowdStrike, that is down some 20%. Microsoft down 3%. United Air, which many of the airlines have had ground halts. American apparently just lifted theirs. That is down 0.25%. I want to get straight to our reporter, Sam Unstead, on our live blog team who's been tracking all the outages. Sam, just give us this moment in time. What is the update at this moment?
So I think where we are now, Danny, is the key issue and where it's sort of moving more and more is towards CrowdStrike. So what we know is that CrowdStrike released an update to part of their software that's used in Microsoft 365 and Microsoft Azure, which is their cloud business. Microsoft, one of the biggest cloud providers in the world by quite a distance. There's quite a concentrated market. And what you're now seeing is that the focus is going more and more onto CrowdStrike. So you said just there, they're down 20%. That's dipped quite significantly further over the course of the last half hour or so. And what you've got as well for them in particular is a major reputational risk. And I think that's why you're starting to see them go further and further lower the longer and longer this continues.
And I mentioned a little bit about the cause, that it seems to have started with a CrowdStrike update. But that cause, Sam, what does it tell us about the fragility of this moment that we're currently in?
Well, I think, so in this sense, so the cloud market, like a couple of sort of major IT markets, it's enormously important. It's enormously important to the way that IT systems work globally. And it is very concentrated. There are only a couple of very, very major providers, Microsoft being one of them. So when something does go wrong here, it can have, a really significant effect. You mentioned, Danny, airlines. Actually, as I was leaving my desk, there's a couple of headlines coming through saying that some of the issues are starting to be resolved or certainly easing. Doesn't necessarily mean that it's going to change enormously, but it's sort of going in the right direction. I think for the rest of the picture, it's all about that concentration risk there. And then another thing to note as well is with the cybersecurity software and security software generally, it goes very deep into the stack. And so although these things are very rare, when they do go wrong, it has a huge impact across the whole system. And so Microsoft, as I say, one of the biggest providers there is, 365, one of the most used software systems in the world. That going down obviously has an enormous impact globally.
Yeah, again, it's just the breadth of different companies that are impacted that is quite striking. I should note for any of our viewers waking up in Washington, D.C., the D.C. Metro is reporting that they are having issues with their system. So, Sam, I hope you're not traveling anywhere. I hope the tube is up and running and you're all safe. Bloomberg, Sam Unstead, thank you so much for that. Be sure to keep following Sam and our global team of reporters covering this. T-Live is where you want to go on your terminal, a great live blog up and running, keeping you up to date with all the latest. Joining us now is Amanda Lynham, head of macro credit research at BlackRock. Amanda, have you tried to log in this morning? Is everything okay?
Everything's okay, but thankfully I'm in person, so thank you for having me.
Good. I mean, JP Morgan, apparently some employees are having a hard time logging in, but again, it just shows the breadth of different companies that are really struggling. I mean, how does it sort of impact your view this morning?
Yeah, the first thing that I thought of when I woke up and saw this was Chair Powell and President Lagarde's comments at the ECB forum in Sintra a couple of weeks ago, where they commented that the one thing that keeps them up at night was cybersecurity risk. And I think this underscores underscores a theme that we've been focused on over the past few years, which is supply chain resilience, supply chain disruptions. In the context of the past few years, we've been thinking about that in terms of shipping goods across international waters, U.S.-China trade tensions from 2018, 2019. But now it kind of takes on a new meaning, and I suppose that makes sense given kind of the prevalence of technology and a lot of these products. A lot of companies are tech companies as well as their core product, and so I believe it's something that we're going to need to focus on for a long time.
Right. To the point of Sintra and that central bank comment, our reporters are now writing that Norway has said that it's going to conduct its banking system liquidity auction via email and over the phone today. So, I mean, again, it does speak to this concentration risk. Yes. And as this world, as you're pointing to, becomes more tech-enabled, as everybody really wants the chips from the same person, is this a moment to kind of step back and say, something's not right here, something's not working with those supply chains?
Well, I think corporates have been focused on that point for a while. We've seen them kind of try to build in more resilience. We've had this kind of ongoing trend of nearshoring, onshoring over the past few years. I think that's also been a catalyst, actually, of some of the strategic M&A that we saw coming out of the pandemic, where the pandemic and kind of the sudden stop in the economy shined a light in some businesses on gaps, whether that was diversification or resilience in the supply chain. So I do think that's something that we will be paying attention to. It underscores this point that this is a very idiosyncratic market. There are a lot of macro headwinds and tailwinds that we're watching, but at the end of the day, it's how companies can navigate a higher cost of capital environment, how companies can deal with inflationary pressures on the business, how companies are dealing with supply chain disruptions. Yeah. And so I think really kind of that focus on, in our market of corporate credit, granular credit selection. We're no longer in a rising tide lifts all boats market for the macro, nor can we kind of treat all companies the same in terms of idiosyncratic resilience.
Does this moment speak also to the fragility of not our IT systems, but of this market in general? I mean, the hits keep on coming. We were rallying up, doing record after record, risk assets were on fire, and it took politics and now some cybersecurity risks to really shake things up.
Right. I think in credit, though, we'll see how we kind of trade through the rest of the day.
Quite resilient.
Credit has been very resilient, and I think there's this tug of war that's happening in the credit market between fundamentals, which would encompass some of the headwinds that you're mentioning, and technicals, which is yield-based demand coming into corporate credit. And I think, as we've talked about before, sometimes the credit market tries to sell off, and it actually can't sell off in a sustained way because actually demand comes in from folks on the sidelines. So I think for there to be widespread disruption in the credit market, leaving this event aside, I think what you would actually need to see is kind of a broad-based disruption in capital markets availability and capital markets access. That, beyond some of the macro tail risks, that's what we're watching in terms of the big risks to credit markets. Can lower-rated issuers continue to access the capital markets even at a higher cost? So long as they can do that, I think it's hard to kind of shake things up too much in the credit market, at least as it relates to lower-rated firms' availability to kind of manage through this cycle. Of course, issues like this, significant shifts in policy, maybe later this year, we're watching very closely.
I mean, but again, nothing really seems to have moved these credit markets through this. And to your point, it has to do with the demand. But demand for what? I mean, the type of issuances we're seeing are really refinancing. There's not a lot of new things coming to the market. So what do you make of sort of the health of those underlying fundamentals of credit markets?
Right. So there are a few things that have been moving the market in kind of short episodes. One was in late 2023 when we had what felt like a disorderly move in the Treasury market. That was enough to, I think, cause some investors to take a step back and say, is this actually the time to deploy? We've calmed down since then. Capital markets, I would say, inaccessibility in late 2023, that's been enough to kind of add some pressure. And then idiosyncratic stories. We've seen, I'd say, a theme of over-levered capital structures that were kept afloat by a low-rate environment, really struggling in this market, and which is notable because we've been in an above-trend growth environment. I think the underlying health is actually quite strong. There are corporates that are on the margin of vulnerability, again, who are struggling to kind of sustain their capital structures. In general, though, corporates were proactive in pre-funding, raising liquidity, so they're in a pretty good spot. Do we read a lot from the fact that most of the debt has been refinancing related? I would actually view that as a positive for fundamentals, right? If you have corporates that, in high yield, for example, are targeting, in some instances, late 2025 and early 26 maturities, to me, that removes some of the refinancing risks. So I view that as a positive, but we acknowledge that's been keeping spreads, I think, anchored.
Well, for that refinancing risk, and I definitely acknowledge that it's not the majority of companies that necessarily have this. But for those that are in trouble at the moment, if we do have a shallower cutting cycle, that it's just 2, 3, it's not your classic cutting cycle, what difference will that make?
I think it makes a big difference because, one, we shouldn't be expecting near-term significant interest rate relief on corporates' ability to refinance at a lower cost, right? So we would expect them to navigate a higher cost of capital environment. I believe that we will have a shallow, gradual rate cutting cycle. We are not expecting a significant deep cutting cycle. It's not clear to me what the urgency is from the Fed to do that. And even John Williams earlier this week said it's really about adjusting the degree of restriction, not really easing below the neutral rate, which it remains elusive, right? We don't know what that is. I think oftentimes folks will say, well, high yield credit, for example, doesn't do well in a cutting cycle, but usually that cutting cycle is because growth is deteriorating. So in this environment, if actually growth holds up and the Fed is just adjusting policy because inflation is hopefully cooperating, it's a much more benign outcome for corporate credit relative to a cutting cycle in response to a sharp downturn in growth or deterioration in the labor market. It matters a lot. But what that also does is it places the emphasis on growth to allow companies to keep their margins stable and profit solid to navigate through that higher cost of capital. So in our view, we need at least trend or ideally above trend growth if we are to experience a gradual rate cutting cycle.
Well, to the idea that you started with, that you kind of have to be picky in this environment because growth has been holding up, but there are flecks of concerns. The airlines reporting being one of them. Delta and United both talking about issues, not IT issues, that's this morning, but earlier this week, talking about issues of there not really being enough demand, and they have a lot of empty seats. Domino's Pizza, some of these, smaller or maybe lower income type consumer focused companies. So how big does that need to get before it's a more alarming crack? Or are you saying now it's just really focused in on certain industries?
Well, I think the point you raise is an excellent one, which is there's this common thread of bifurcation across the consumer. So lower end consumers we know have barely been under pressure because they're net borrowers in this economy, whereas higher end consumers are asset owners and have benefited to some degree in house price appreciation, equity market appreciation. And so it does matter where the companies are focused in terms of what type of customer, what category, what channel. I think in order for it to be a broad-based concern about the consumer, we would really need to see, as Chair Powell said, kind of unexpected weakening in the labor market. We would need to see, I would see, a real weakening in kind of corporate profits such that they turn to kind of headcount reductions to save margins. I don't believe that's not our base case. But I do think this dispersion in the consumer is something that will be with us. It's always existed, but it's actually more pronounced, we believe, in this cycle and matters more in this cycle because of the reasons we mentioned. Because if you're a net borrower, you actually are feeling ongoing pressure, where if you're an asset owner in a period where house prices are up 49% since 2019, you've benefited quite substantially.
Absolutely. It was really wonderful to talk with you, Amanda. Amanda Lynham, hopefully you're not traveling anywhere. Hopefully you can stay put and everything's good. Amanda Lynham of BlackRock. Okay, coming up, shares of Swedish aerospace and defense Saab getting hit this morning after reporting earnings. We're going to speak to the CEO next on Bloomberg Brief.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We are tracking a global IT outage for you that stems from CrowdStrike, a software update that has specifically hit Microsoft Azure. So a lot of systems that are using them are unable or at least struggling to operate this morning, maybe going back to pen and paper with the case of Norway and their central bank for liquidity operations. CrowdStrike is down some 19.5%. Just some of the other headlines we're tracking. According to the AFP, the Olympics Committee says global IT issues are affecting it. The Washington, D.C. Metro this morning is impacted. Many airlines are halting ground flights, have a ground operation on. American Air just lifted theirs. Is not clear if they are up and back in the sky, but it is airlines, it is banks, a lot of different industry. Now, let's turn to earnings this morning. The Swedish aero and defense company Saab had hit a fresh record this morning, a touch off of that after reporting earnings. Joining us now is the CEO, Michael Johansson. Michael, thanks for joining us this morning. I do want to get to your earnings, but I have to start with this IT outage, considering it has to do with cybersecurity software. And as a defense company, obviously this is something you're acutely aware of and keeping track of. I just want to start this. Is it impacting your systems at all this morning?
We're looking into it, but so far we haven't seen an effect at all. But of course, we take this seriously and we are continuously monitoring it. But I don't have any details. I haven't seen anything that has affected us yet.
How do you think about this moment in terms of the vulnerability of industry's cybersecurity networks? Obviously, as a defense company, this is very important to you to build the type of industry that so many countries need. Does this show some underlying fragility and issue with the supply chain?
Well, of course, I mean, and we need to continue to work on this sort of zero trust approach of things, which is more about how you protect your information over time and how data-centric you become rather than to protect the fort of information, so to say. And this we discussed during the summit in DC last week, and there are solutions going in that direction. So you have to be able to interact at the same time as going into a cloud sort of based information setup. You have to work on the zero trust approach, which I think there are many companies going in that direction. But this is something we take really seriously and working diligently upon. So it's an important area going forward. But without the zero trust approach, I think it will be difficult.
Is there a concentration risk, the fact that this is all stemming just from one company?
I think so far I think it's more about the architecture and how the service-based approach will look like. To be agnostic, you have to be able to work with several different suppliers, of course, and you have to certify them, and they have to prove that they are as certified and reassured as we are on our system. So we haven't selected anyone yet. We're looking into this, so we will see what happens going forward.
Michael, obviously, if this hadn't have happened this morning, we would have started by talking about your earnings. Let's go there next, because you did have a very high order book. And I wonder where you see us in the defense spending cycle. Is it a moment that's about to ramp up, or are we somewhere near a peak?
I don't think we're near a peak at all. I think we're looking at growth in the next coming 10 years. Look at the that the need for the support to Ukraine, but also the replenishment of stock and capabilities in the European countries, which are now spending more and more on defense, and also increasing capabilities at the same time. So there will be, I think, lots of growth going forward, and we have just started the last 2 years just to take these steps. And I'm afraid we're not doing enough. I think there will be more has to be done. So this is more like a paradigm shift than anything else.
You know, the Sweden's defense minister only a few months ago said that this is a challenge that's being felt across Europe right now in terms of the lack of defense capabilities, that we have a defense industry base shaped for a peacetime situation. So what's necessary to change? What needs to happen to get things in the right place when there is a hot war in Europe happening right now?
Well, we as industries are investing a lot as we speak, of course, but these things, that's long-term commitments over sort of mandate periods for politicians, are important to take the really big steps, to really build the new facilities, to invest in automation, to take the big investments. We're getting there, but I would say that to realize that this is really a paradigm shift rather than incrementally taking small steps, which is difficult for industry to refer to relate to when you take big investments decision, is probably the most important thing. Then, of course, if EU, for example, takes a big decision to together put lots of money in an initiatives like the European Defence Industrial Programme that has been discussed, like we did when the pandemic hit us, then, of course, if we put a lot of money there, then collaboration and big programs and alignment of requirements will happen. But these things must be implemented to make sort of taking the big steps. But long-term commitments is important to us from governments while we are taking risks as industry and investing.
I mean, there are certainly more prospects for disruption, and one of them might come from the U.S., not just European hot wars, but of the growing likelihood of a second term for former President Trump. And the language that him and his vice president have been using are certainly more isolationist, of not necessarily being willing, for example, to help Ukraine. If the U.S. does drop out as a supporter of Ukraine in supplying weapons to supplying defense systems, is Europe ready to pick up the slack?
I would say that Europe has to, that's the most important thing, that Europe has to realize that they have to take a bigger responsibility going forward, to invest more money into this. And I saw the summit last week, I attended it myself, to see that so many countries now within the alliance are now seeing 2% as a floor, and many are going further than that. And the support of Ukraine with a $40 billion support going forward the next year, and the coordination from NATO now supporting Ukraine. I think that's great initiatives. Meanwhile, I mean, Europe continue to step up, do it more quickly, and we have to sort of work with that independently of administration in the US. And the transatlantic link is really important, but we have to be more sovereign as a European continent when it comes to the defense and deterrence and resilience.
Okay, Michael, thank you so much for joining us this morning. We appreciate it. Michael Johansson, Saab Group CEO. Just want to give everyone an update on what we are hearing from CrowdStrike, the CEO commenting on a post on X saying that the issue has been identified, isolated, and a fix is being deployed. They are saying that this is not a security incident or a cyber attack. Again, many systems are down this morning. Airlines, banks, all experiencing some issues. But according to CrowdStrike, they're saying that an issue has been deployed to fix this, and that the issue has been identified and isolated. Okay, coming up, we're going to round out the week with earnings and Fed speak, and hopefully a solution for this so everyone can get back and traveling with no issues. This is Bloomberg Brief.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
This is Bloomberg Brief. I'm Lizzie Burden, joining you for the last part of the programme from London. A look ahead at what's on the docket. We've got more earnings with American Express reporting just before the bell. Then we have the New York Fed President John Williams speaking at 10:30 a.m. Eastern, followed by Atlanta Fed President Raphael Bostic delivering his remarks at 1 p.m. A quick look on the markets as we head towards the weekend. We've been risk-off in the Asian and European sessions given this global tech outage, and it's been affecting the banks, the airlines, the London Stock Exchange. Look at those shares in the pre-market. CrowdStrike, Microsoft and United in the red as we head towards the Wall Street Open. You've had the CrowdStrike CEO saying it's not a cyber attack. The FAA saying it's being closely monitored. The IT systems at US airports have been impacted, of course. And in terms of the macro picture, the two-year Treasury yield is higher a basis point at 4.4% as we await that Fed speak. Euro dollar currently, as reflect on the ECB meeting yesterday at 108, Brent at $85 a barrel, and copper looking for a worse week since 2022 on the China news. That's it for Bloomberg Brief. Surveillance is up next.
Look at the number of women that want to learn the game, young girls that are joining on the tee. Really an exciting time for all of us to really capitalize on this moment. When you look at women who are making most of the purchasing decisions in households, whether that's cars or that is home or financial services, and who are going to drive the wealth of the future, it's women.
Obviously, we have our car business and we need to have games here and all that sort of thing. But what else can we do? How do we grow the platform? The whole ticket pricing process. It used to be very yellow sheet of paper, maybe some numbers around it. There was not a lot of science behind it. We're now in the world and have been for many years, as most other similar businesses are, to dynamic pricing. So our pricing for a seat may change hourly if we see demand for that, all driven to maximize revenues.
The balance sheet is so important to the success of the team. And a big part of my role is to make sure that the balance sheet stays strong and that we are prudent stewards of capital. There are things that we can do that are irrespective of winning or losing. Take a look at the first budget that comes from one of the teams and ask questions about, do you really need to spend that much? Are you really shooting high enough when it comes to partnership revenue?
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
This is the crescendo about a narrow market and bad breath reaches its peak, right? Boom. Massive reversal.
I think it is sustainable, and I think it's what we've all expected to happen. Until we see the fundamentals change, I'm still not entirely sure that you're going to see the broadening out that a lot of people hope.
The market, I think, is aggressively pricing in for several cuts. That feels like it's a little bit too much.
That's what small caps are really queuing on. It's the fact that you can now be in an interest rate cutting cycle. That's the new chapter that we're in.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
You know, I typically sit here and say, let's get you to the weekend on a Friday morning. The weekend feels like a lifetime away. Wow, what a week. It gets busier this morning. Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Your top headline, global aviation grinding to a halt this morning following a worldwide computer outage. This is what we understand so far. United, Delta, American Airlines grounding flights because of communication issues related to issues with one company in particular, and that's CrowdStrike. CrowdStrike this morning at the pre-market is down about 17 percentage points. It was worse this morning. We're off the lows. This is what we've heard from the company so far in just the last 5 minutes. Here's the statement. CrowdStrike is actively working with customers impacted by a defect found in a single content update for Windows. This is not a security incident or a cyber attack. The issue has been identified, isolated, and a fix has been deployed. Danny Berger, what a start. The disruption goes worldwide.
It's incredible just the breadth of industry and place that this is impacting. In one very real way, this is a story about supply chains and concentration, just the amount of companies that are reliant on CrowdStrike and therefore reliant on Microsoft Azure. For airlines, it's particularly acute because we think about after COVID, they lost a lot of talent. So if they want to try to get around this, they're going to have a hard time doing so, again, because they just don't have the people in place to do it.
We've got a lot to work through this morning, so let's get straight to it. I want to start with the price action first. Equity futures on the S&P 500, just a little bit softer, down by 1/10% on the S&P. In the bond market, it's quiet. For now, at least, 420 on a US 10-year, and in foreign exchange, the euro, just a little weaker here at 108.79. Coming up on the program, we'll catch up with Bloomberg's Guy Johnson on the latest as tech outages lead to global disruptions. Anne-Marie, as the former President Donald Trump addresses the RNC, and we'll speak to RBC's Amy Wu Silverman on two big volatility events on the horizon. We begin with our top story, a widespread global computer outage hitting businesses worldwide. Here's the latest, a series of technical glitches linked to Microsoft and CrowdStrike grounding airlines, hitting banks and closing restaurants around the world. Microsoft saying they are aware of an issue with their Azure service and a resolution is, quote, forthcoming. Bloomberg's Guy Johnson joins us now with the latest. Guy, I think we all woke up to this. What are you seeing on your side?
Started in Asia, John, it's worked its way through Europe, and it's now starting to affect the United States. We saw US carriers issuing ground stops a little bit earlier on. I think American has now lifted its, but nevertheless, you are going to see significant disruption in the airline sector today, potentially into the weekend as well. But as I say, it started in Asia. I've never seen a global story develop in this way. We've seen limited and regional issues with IT, with airlines, with other sectors. and now we get one that is connected. And that speaks maybe as well to lessons learned that we got out of the pandemic, John. We learned how interconnected the world's supply chains are. We're now learning how interconnected the global IT system is. That CrowdStrike update having a significant effect. We don't yet know how long it is going to last, but in the airline sector at least, the effect of this with aircraft out of position, with crews out of position, with passengers backing up, and that's what we're seeing at airports globally, it could take a number of days to fix this issue.
Guy, I'm sure a lot of people traveling just simply want to know, can planes get into the air this morning? Is there, I understand the backup and that sort of thing, but can they actually get flying? Is there any hope for anyone trying to travel this weekend?
So it's not, Danny, it's not an issue with the aeroplanes per se. It's an issue with everything that goes around them. It's check-in, and we're hearing some airlines and some airports having to do check-in manually. Yes, they are sharpening their pencils at some airports to try and make this happen. It's payment systems. Traditionally, airlines have been very slow to update their IT systems. It's incredibly complicated, but some of the systems have been migrated to the cloud. And the problem is that with some of it out, everything grinds to a halt, and that's the problem here. It could just be a payment system, it could just be a check-in system, it may have nothing to do with the aircraft. We did see Delta and United, for instance, issuing ground stops earlier. This is about aircraft that are on the ground and the communication they have with the rest of the airport system and the ATC system, which is why that happened before. That happened. Now, we've seen something like that happen before, but never on this kind of scale globally. So the problem is, though, that different airlines, different airports are being affected in different ways. There isn't a kind of clean read on exactly what is happening here, and that speaks to the idea that airlines have been kind of piecemeal upgrading this system and then that system, taking that bit onto the cloud and leaving that system behind. And that's, I think, the problem we're experiencing this morning.
Guy, I just want to tap into a word you used, manually, and then you talked about sharpening pencils. Can you just walk us through what that looks like? Are we seriously talking about certain airlines writing out boarding passes this morning?
Well, if you can't check passengers in, and that is the system that is causing problems, then maybe that's what we ultimately come to. I suspect, John, it's probably a little bit more complicated than that. We all know these days that when you fly, you have to fill in various forms, and the system needs to know who you are and where you're going and what your ID looks like. So I suspect it probably is a little bit more complicated than that. But yeah, I think certain airlines will be reverting back to much more manual systems when you check in. The problem with that is it takes so much longer. We're all getting used to showing up at the airport and having a lot of this process automated. A lot of the airlines have been trying to take us in that direction. There's also bags to factor into the thinking as well. But yes, I think the process is going to be more manual today and therefore potentially a lot slower.
Guy, you've been covering this throughout the morning in London. Have you got a decent sense of whether this was Microsoft, whether it's CrowdStrike? I got a sense this morning that it was both. In the last 5-10 minutes, it looks like it's CrowdStrike.
It feels like this was a security update gone wrong, John. The problem with cybersecurity is that it needs to sit everywhere within the system. It's not just something that sits at a level within the service. It has to go into everything. Therefore, it is much more embedded into everything because it has to see everything. The security system has to see pretty much everything, and that appears to have been the problems here. But it's affecting different systems in different ways, and I think that is where the challenge really lies, and how quickly they can kind of reverse engineer the process, take out what they were putting in and put back what was there previously. I don't know. It feels like it could take quite a while.
Guy, we're going to catch up with you in the next hour, I hope. Guy Johnson there, out of London on the latest with the airline business. Much more still to come from the team here at Bloomberg. Going to promise you updates about every 5-10 minutes or so on this program this morning until ultimately this is resolved. The latest from CrowdStrike in the last literally 10-15 minutes, Danny. This quote here, a statement from the CEO, actively working with customers impacted by a defect found in a single content update for Windows Host. This is not a security incident or cyber attack. I think that's a really important line in this statement. The issue has been identified, isolated, and a fix has been deployed.
Cyber attack or not, it just does show a vulnerability. It wasn't that long ago that Powell was in Sintra saying that cyber risks were the #1 thing keeping him up at night. But to the point of things being done manually, again, I'm just really struck by the breadth of this. Apparently, Norges Bank is having to do liquidity auctions by email and telephone this morning. It's everybody going back to basics.
We're used to local outages. in specific regions, in certain industries. I don't think we've seen much of this before, where it's global, around the world, and across industries, from airlines to restaurants to payment systems.
To the point where you have people at JP Morgan waking up and trying to log on and not being able to do it. But that's the thing, it's really simple stuff, right? It's not, to Guy's point, it's not that planes can't get onto the air, it's that people literally can't log on. And that's enough to disrupt business globally at this point.
If I was catching a plane, I'd be frustrated. I imagine a lot of people watching this program are, sure. If I was logging into my company's system and couldn't
You get
get
an early
in,
weekend.
I think I'd be okay with that one. Let's see how that one works out. As I say, much more updates through the morning right here on Bloomberg TV. We need to turn to our next story. Two campaigns heading in two very different directions.
If I had not moved my head at that very last instant, the assassin's bullet would have perfectly hit its mark, and I would not be here tonight. 4 months from now, we will have an incredible victory, and we will begin the 4 greatest years in the history of our country. I will end the electric vehicle mandate on day 1, thereby saving the U.S. auto industry from complete obliteration. That means 2 things on day 1, right? Drill, baby, drill, and close our borders. So I better finish strong, otherwise we'll blow it, and we can't let that happen.
Donald Trump formally accepting the Republican nomination, his grip on the GOP appearing tighter than ever, just as President Biden's campaign hits a new low. The Washington Post reporting former President Barack Obama believes Biden's path to victory has greatly diminished. Anne-Marie joined us now from the RNC in Milwaukee. You were in the room, Anne-Marie. What was the big takeaway for you?
Well, Jonathan, just the split screen is astonishing between President Trump versus President Biden. President Biden isolated, more calls growing for him to step aside. While President Trump, it was so clear last night in that room that he has the absolute control on this Republican Party. Now, it was a more than 90-minute speech, and a lot of the times there was moments where he really veered off script and went into some of the more similar rhetoric that we're used to from former President Donald Trump, and at times being very dark when he was talking about some policy, especially when it came to immigration. But the start of the speech, that emotion he brought to the floor, you could hear a pin drop. He was talking about the fact that if another world, if his head was a milli-inch in a different direction, he would not be here to tell that story. He said God was on his side, and he said he's never going to recount this story again because it is too painful. And there was tears in some of these individuals' eyes that see him almost as a god. So this was the emotional part of the speech. A lot of this, I imagine, is going to get sliced and diced on TikTok, on Instagram, and this is the appeal he's going to have to American people, because as he's recounting this story of this attempted assassination on his life, he's also talking about the fact that he wants unity. There's too much division in America. So he's calling for unity and the fact that he wants to be a president for all of America, not half America. He says, what's the victory in winning just half of America? But then as the speech went on, more than 90 minutes long, we heard a lot of the same things from Donald Trump. 2 things were clear, though. He wanted to tap into the concerns Republican voters are seeing, and a lot of voters are seeing, quite frankly, across the board, and that's immigration. He was talking about there how it's an invasion of aliens at the border. In a little bit more of a darker language, he was talking about how this has meant misery and crime on the streets of America, but also the economy. And he was trying to tap into the high prices of groceries and energy. And when he said drill, baby, drill, members on that floor got up and started chanting with him as well. So it was an arc of a speech, one of emotion, and then really at the end, ending with a lot of energy.
Anne-Marie, appreciate the update. We'll touch base with you again in about 60 minutes' time. AMH there from Milwaukee, Wisconsin. With us around the table through the hour, I'm pleased to say it's Stuart Kaiser of Citi. Stuart, good morning to you. Let's take a step back because we've got a lot to cover. Let's start with markets so far this week. How much of what we've seen over the last 1-2 weeks is down to the so-called Trump trade?
I think some of it, I would credit much more of the rally to the payrolls report and the CPI data more so than Trump. Obviously, the Trump odds have been favorable. I was just actually, marketing in Europe and the Middle East. I think there's very high conviction that Trump is going to win the election over there. I think probably higher than what we see in the U.S. Some of the popular Trump trades, though, banks being one, yield curve steepeners being another, I think are trades that people want to have on anyway. And perhaps the polling is getting them in a little earlier or giving them a little higher conviction in it. But I don't know that it's necessarily a positioning that they would be averse to, regardless of what's going on in the election.
So it's using it maybe as a bit of an excuse, but how much of it is also just down to positioning itself, down to how short we were small caps and how over our skis we got all the big high-flying tech?
Yeah, I think that's right, Danny. If you look, what's happening the last week or so is sort of a microcosm of what happened late last year, which is you have solid economic growth, you have inflation surprising to the downside, and you have the market getting ready for the Fed to signal cuts. It's a little bit lower volume right now than it was late last year, but the recipe is the same. And frankly, if you go back to the June FOMC and CPI data, which were on the same day, the first 3 hours of that trading day, you saw a very similar trade. You know, regional banks rallying, small cap rallying. So this is the soft landing trade, and we're in a soft landing trade. To your point, it does pressure positioning, which gives it just a little bit extra juice.
So if I'm going into the weekend, I'm thinking of two things. One, let's hope this tech outage disappears by the time I get to Saturday. We don't have to worry about this anymore. The second one is what's going to happen with the sitting president. We've had report after report in the last 24 hours. I just love a market perspective. If we get that announcement over the weekend that President Biden is stepping aside and he's not going to be in the race to get a second term, what do you think markets look like Monday morning? What's vulnerable given the run-up we've seen?
Yeah, it's a great question. I mean, we obviously had very big political news over the weekend, last weekend, and I think the market probably opened a little more stable than we would have expected. You know, I think you would assume that the market will think if the Democrats were to change their candidate, that would get the odds a little bit tighter than they're being priced. We're still of the view that the election is very close to a 50-50 call, probably right up until Election Day. So I think if you were to get some news like that over the weekend, it would probably start to push the market in that direction. And our thinking, because you look skeptical, is that this is a very small number of states. It's a very small vote differential in those states, and technically we don't know both candidates yet. So I think to get too far in either direction is probably irresponsible.
I'm not actually that skeptical personally. It's just the contrast that you draw between what people think abroad as they look into the United States and the conviction they have that Donald Trump's getting a second term and how we feel about it here in the United States. What do you think explains that?
You know, you miss the forest for the trees, maybe. I think when you're in it, maybe you can't appreciate it as much. And I also think, look, I think there's a lot of international investors that probably maybe don't understand the exact details of the Electoral College and how all that works anyway. They're seeing the national polling as such a wide differential and maybe not as focused on those kind of battleground states that are just going to really decide the election, right?
Stuart's going to sit with us through the hour. Stuart Kaiser sticking with us through the next 60 minutes or so. With equity futures on the S&P 500 totally unchanged. I promised you an update on that global tech outage. Let's get straight to it right now with your Bloomberg Brief. Here's Yahara Hakez. Hey, Yahara.
Hi, John. Companies around the world facing tech outages this morning. The issues plaguing firms including banks, broadcasters, and airlines. As for what's behind it, CrowdStrike has come out and said that one of its products caused Microsoft's Windows operating system to crash. The CEO saying on X, this is not a security incident or cyber attack. Meanwhile, Microsoft also warning that its 365 apps and services may continue to run in a degraded state. An earnings beat from Netflix. Netflix beating analyst expectations across all regions, adding 8 million new subscribers in the second quarter. The results were nearly double the average expert estimate. However, the forecast for the third quarter coming in slightly weaker than expected. Shows like Bridgerton and The Roast of Tom Brady have helped the streaming giant hold on to 278 million subscribers worldwide. And Donald Trump taking on President Biden's electric vehicle policies in his nomination acceptance speech last night at the Republican National Convention. Trump vowing to end on day one Biden's plan to have 50% of all new vehicles sold by 2030 be electric, saying he would save the auto industry. Trump saying he would instead direct the money to projects like roads, bridges, and dams, though it wasn't immediately clear how he would make good on the pledge. That's your Bloomberg Brief, John.
Yahara, thank you. The tension around that last one, ending the EV mandate at a time when Elon Musk is helping to fund the campaign.
Right.
Work that one out.
Right. Well, also Elon Musk cozying up with China at a time that Trump is also using and the VP, we should say, is using very strong rhetoric against China. I think there are quite a few contradictions we could pick apart.
Just these points of tension all around the world right now that we need to explore. We'll come back to that. Equities right now just about unchanged on the S&P. Up next on the program, global aviation grinding to a halt.
If it undermines confidence in cloud and server ability to run future businesses, to run AI models of the future, all the productivity growth that we're expecting could be slowed down.
That conversation up next, the latest on a worldwide computer outage just around the corner from New York City this morning. Good morning.
authorities.
Could face bigger challenges. Britain's next.
It was going to keep Green World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Live from New York City this morning, welcome to the program. Equity futures on the S&P just about positive as we close out the trading week. Under surveillance this morning, global aviation grinding to a halt.
If it undermines confidence in cloud and server ability to run future businesses, to run AI models of the future, all the productivity growth that we're expecting could be slowed down because suddenly there'll be hesitation around onboarding reliance on these cloud systems. It reinforces and exacerbates systemic risk and concentration risk. And I think that topic will emerge more and more in the future.
So here's the latest. Widespread outages disrupting the airlines. United, Delta, American, and Spirit all grounding flights due to communication issues. The latest from CrowdStrike reads as follows, a statement from the CEO. We're actively working with customers impacted by a defect found in a single content update for Windows hosts. This is not a security incident or a cyber attack. The issue has been identified, isolated, and a fix has been deployed. To weigh in on what's happening in the airline industry, Benedict Campbell joins us now for more. Benny, great to catch up with you, sir. Just walk us through what's happened and how some of these companies are dealing with it.
Hi, yeah, so a bloodbath really that we're experiencing. A lot of the disruption has sort of cascaded from Asia over to Europe and to the US. You mentioned some of the US airlines, they have this, they're on the ground. Doesn't mean that the aircraft couldn't fly, but this is an industry that's very cautious, that wants to take these extra precautions. So whenever there is a disruption, there is the directive to go slow. That's what we're seeing right now. We have about 1,400 flights globally that are disrupted at the moment, that are cancelled in some cases. Give you a sense, we're expecting about 110,000 movements today, so it might not seem like a huge amount, but this is something that ripples through the industry and will take days to fix. We just heard that they think they've fixed the actual technical issue on the cyber side, but for this industry, it'll mean a lot of aircraft will be out of position. It will mean a lot of planes will be, they'll need to put them somewhere else, and that'll take days to fix.
And we've already seen the images, Benny, of people in airports lining up, waiting for things to get done because simple issues like airlines having a hard time logging into their systems. Do they have the talent, the staff even, in a post-COVID world to help clean some of this up once the IT issues are resolved?
I mean, in one word, no. And that's obviously been an issue ever since COVID, that we have too few people on the ground. The ground staff are very thinly spread. And this is, at times like these, this becomes very noticeable. It's also a sort of worst case scenario in terms of timing. Today was supposed to be the busiest day of travel in the UK, for example. School holidays are upon us. A lot of people are heading out. So what was supposed to be a really frantic and busy travel day has turned into something really chaotic. Berlin, for instance, closed down. Amsterdam, pretty heavy disruptions there. These are big airports, and a lot of these aircraft that won't be able to land there, we've seen some of them turn back. That's going to, as I said, take days to fix because all these aircraft will be out of position.
Great. Hey, Benny, just one question from an investment perspective. I mean, should I treat this any differently than, let's say, weather disruption around a Thanksgiving weekend, assuming it gets resolved in a reasonable amount of time? Or is this just kind of, your typical airline disruption? We move on once the backlog clears?
Well, I mean, it's atypical in the sense of the size and the scale. And I think one word that a lot of people have used, and you'll hear in the next couple of days, is sort of unprecedented. What it will raise is the issue of, are we facing an industry here that is underinvested? Do we have creaky technology? And the answer in some cases is definitely yes. It's kind of interesting to see that You've got a lot of these issues over here in Europe, some of them in the US. For instance, in the Middle East, the Emirates of this world, the Qatars of this world, they appear to be unaffected. So that's going to raise some questions as to, is this an event that is more isolated to, shall we say, legacy carriers dealing with legacy products and really haven't invested as heavily? So that's going to be something that will be quite heavily scrutinized going forward.
Benedict, do you think it's just fair to say that this was one small issue with one firm, but it just so happens that it's one firm we all rely on? Isn't that ultimately the issue here, that we all run the same program, we all rely on the same company?
Well, that is indeed that will be the other big question that will come up. Like, are we spread too thin? Are we all too reliant on one product? And if something goes wrong there, then suddenly everyone really suffers. And should there be more redundancy built into the system? I mean, the aviation industry, like few others, has redundancies built in. Every aircraft has multiple redundancies built into its systems, and it's an industry built on safety. For something like this to happen is really unprecedented, and it will raise exactly that questions. What is our backup? What are our redundancies? Why didn't we have them? What kind of spending are we looking at? Those will be tough questions, but a lot of this has to also do with taxpayers' money. The FAA and other regulators, they don't have bottomless sort of amounts of money to spend. So again, that'll be very difficult to sort of pass in the next couple of months and beyond.
One of the very best, Benedict Camo of Bloomberg. Benny, it's great to catch up, sir. Appreciate your time. Aviation around the world just grinding to a halt. Responsible for it, CrowdStrike in some ways, and this is what they say: the issue has been identified, isolated, and a fix has been deployed. Danny, I think you asked the perfect question. Even if the issue has been identified, isolated, and the fix has been deployed, for the airline industry, the planes are in the wrong place, the staff are in the wrong place. This can take a long time to mop up.
You need to move planes, you need to get through people who've been waiting in lines, and you just don't have the staff in place anymore. So this is why, sure, it's an impact today, but it's going to stretch probably for a couple of days.
Into the weekend, most likely. More updates still to come on that. Coming up on this program, Netflix shares falling after its forecast falls short of estimates. We'll catch up with Geetha Raghunathan of Bloomberg Intelligence in just a moment. From New York, this is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Okay, we've got a lot to work through, so let's start with the price action. Equity futures on the S&P 500 just about positive. We're down on the week on the S&P, steep two-day decline on the benchmark here in America. We're poised for the worst week since April. The Russell just about unchanged, the Nasdaq going nowhere. In the bond market, 2s, 10s and 30s. Yesterday was a curious one because jobless claims came in and moving in the wrong direction. They were higher, and Danny, then yields started to creep higher at the front end too, which I couldn't really make sense of.
I have to say, I think just yesterday in general was a really weird day. A really good stat from Cameron Christ. Basically, we've never had before where you get the market hit an all-time high and then fall more than 1% 2 days in a row. So I think it's just, you know, a little bit of weirdness and panic in this market.
A little bit unchanged, going nowhere in the bond market. Let's get you a sense of things in foreign exchange. We'll look at the euro. The euro against the US dollar at the moment, just south of 109, 108.85. We're negative on that currency pair by about 0.1%. Plenty of tough stories for you, so let's get straight to it. Under surveillance this morning, a global tech outage hitting businesses worldwide. A series of technical glitches linked to Microsoft and CrowdStrike systems impacting major airlines, banks, restaurants, and a whole lot more. Got a series of statements here to share with you, so let's start with CrowdStrike. One of the companies that a lot of people are blaming for the outage this morning. That's down about 16% in the pre-market. Here's the statement from that company. The company's actively working with customers impacted by a defect found in a single content update for Windows hosts. This is not a security incident or a cyber attack. The issue has been identified, isolated, and a fix has been deployed. Now, this is hitting different industries in different ways, and within those industries, hitting those companies in different ways as well. So take Air France. They say their operations are mostly back to normal, given this issue. As we understand it from them, flights to Amsterdam and Berlin are disrupted. Other flights have departed and arrived normally. The latest from United, I think this is an important update on the US side of things, Danny, for anyone waking up this morning, working out whether the flights are going in and out of airports this morning from United Airlines. This is what they have to say. A third-party software outage impacted computer systems worldwide, including at United. We are resuming some flights, but expect scheduled disruptions to continue throughout Friday. I imagine we're going to hear from a series of airlines throughout today on this issue.
Yeah, Delta being one of them, they've paused their global flight schedule. They're also going to issue a waiver like United is doing too. And to your point, it's not just airlines. The DC Metro also this morning, for anyone waking up hoping to take that to work, apparently they're still operating, but they are facing delays. And again, it is a breath, and it all stems from what we understand just from one company. We're in this world where everyone wants to say that they're tech-enabled. Everyone wants to get their hands on NVIDIA chips. It's chips. It's a concentrated market. And I think this really raises a risk. As more companies move that way, how vulnerable are we?
We're becoming reliant on one company, seemingly, for one big issue. And in this case, it's CrowdStrike. CrowdStrike's down about 15% in the pre-market. We'll keep an eye on that. Got to keep an eye on this as well. Former President Donald Trump cementing his hold on the Republican Party in a speech formally accepting the nomination to run for a second term. President Joe Biden facing growing pressure from his own party to step out of the race. The Washington Post reporting former Speaker of the House Nancy Pelosi is telling Democrats Biden may soon be persuaded to step aside. You heard the comments, Stuart Kaiser, from the former president yesterday evening. Drill, baby, drill. I think it's really important to go over how energy did under his first term and how energy's done under President Biden. Typically, it doesn't really matter what they've got to say on the issue over the last 2 terms, because he was talking about drill, baby, drill in his first term and energy didn't do well. President Biden wants to move away from fossil fuels. Energy's ripped. How important are those comments from the market perspective?
I mean, I think they matter. It's funny, if you look at U.S. oil production, it's like 13 million barrels a day. It's as high as it's ever been, and that's been under a Democratic White House. You know, we've kind of said around the election you have 3 sectors that are in play, you know, banks, healthcare, and energy. You know, healthcare and energy both, I think, have some puts and takes. Yeah, you want to drill, but drilling puts downward pressure on oil prices themselves. So if you're investing in that sector, you kind of need to pick where in the sort of energy stream you want to be. You might actually want to be in more of the services and drilling area as opposed to like exploration and production, which is much more sensitive to the headline price of oil.
Interesting. What do you make of the call on banks? This is what we heard just yesterday. Chris Harvey, Wells Fargo, upgrade banks to outperform. This is what we heard from Citi at the start of the week. Your colleague, Stuart Cronut. Overweight U.S. banks is our preferred Trump trade. That's from Scott Cronut. Stuart, what do you make of these calls to overweight banks? It's becoming quite consensus off the back of the political developments.
Yeah, and I think, as I mentioned earlier, banks is something people are comfortable being long anyway, just given on the outlook for rates and the FOMC, the valuation's a little lower. Maybe you get some deregulatory. You also got some positive news on the Basel side, maybe those rules being rolled back a little bit. So I think it's a sector people kind of want to be long a bit as well. From an election perspective, it does feel much cleaner than energy and healthcare. So I think that's why people are using it. So banks and corporate tax rates, I think, are the cleanest ways to trade the election right now.
Should we hear any sort of news, and markets already sort of leaning this way, that Biden does drop out, how difficult is it going to be for this market to process a new presidential candidate and the policy implications that might come with it?
Yeah, you know, it'll depend who they go with, if that's the eventuality, right? You know, if they go with Vice President Harris, you probably assume some policy continuity, and it can be a, you know, steady as she goes type thing. The question would be, a lot of people have proposed, no, this should be a competitive process. Well, a competitive process introduces a lot more uncertainty, and I think you will get election risk premiums kind of bleeding into the system if that happens.
We'll come back to that topic in just a moment. I want to turn to Netflix. Hardly talked about it this morning. It's down in the pre-market by about 1 full percentage point. The streaming giant adding more than 8 million customers in the second quarter, but forecasting third quarter revenue that fell short of estimates. Geetha Raghunathan of Bloomberg Intelligence joins us now for more. Geetha, before we get to the forecast, let's talk about the numbers. They blew it out of the water. The numbers were absolutely fantastic. How impressed were you by what they did on the quarter?
They've absolutely crushed it, John. There's no doubt about that. I mean, this has been the big question for Netflix coming in after they kind of rejiggered their whole model, introduced those new initiatives with the password sharing crackdown, as well as the ad-based tier about, yes, they will capture some low-hanging fruit with that, but will they be able to sustain the subscriber momentum? And yes, they absolutely did. They blew it out of the water, as you just said, 65% above consensus. And just over the past 4 quarters, ever since they've implemented these initiatives, they've added roughly 40 million subscribers. That's a huge number. And this year, this was, by the way, one of their strongest second quarters ever, right after COVID, 8 million subscribers. Second quarter is seasonally very soft. But the one thing I think that, you know, we need to kind of take into account here is that going forward, yes, we're going to see subscriber momentum, but we also need to pay attention to the fact that last year, third quarter, was when all of these changes kind of went into place. So we're going to be lapping that in the third quarter. So we might see that slight slowdown come the third quarter and the fourth quarter.
Yeah, they're really taken by the success of their ad-based tier, but so much more that Netflix is saying, we have more space to fill, and more people are joining this tier, so we think we can bring in more people. But the fact that they still have more space, and they've not sold all of that ad space, what does it tell you about the willingness of advertisers to come in and pay maybe what Netflix wants them to?
Yeah, so the ad-based tier, I think, is a source of both the greatest opportunity for them, but it's also creating some headwinds right now. So they're doing all the things. They're kind of putting all the plumbing in place. They're putting all the infrastructure in place to kind of ramp up that business. But they did point out that it's not going to be a meaningful growth driver in 2024, but in 2025, they're going to scale it up. So they are investing in programming. Live sports is definitely a category that advertisers are super interested in. You have a captive audience. They talked about the roast, the Tom Brady roast that performed really, really well for them. So they're definitely kind of getting more into this live category. They have investments in NFL games, 2 Christmas Day NFL games later this year. You have WWE programming. You have that big boxing match between Tyson and Jake Paul. So they're doing things to kind of capture the advertiser wallet for sure. But there is a lot of stuff that needs to happen on the tech side. So there are a lot of, you know, in-house ad tech investments that need to take place before advertisers can really come on board.
Geith, you mentioned a lot of really big titles that or programming that's come through. Do they start to almost become like we used to treat a movie studio? Where the company becomes super sensitive to these big chunky products each quarter, and we have to kind of cover them in that way?
Not so much for Netflix, because they have both good depth and good breadth of titles. And yes, their originals are performing really well for them. I mean, they called out Bridgerton, which was an absolute massive, monstrous success. Over 1 billion hours of that one program alone streamed in the second quarter, the biggest original by far globally across all streaming platforms. But it's not just originals that's performing for them, and it's not just one content title. They do have the advantage of having a lot of locally sourced titles that have done really well for them. They called out India as being one of their strongest markets. In fact, it was the second largest market in terms of subscriber growth, and they spoke to a lot of local Indian titles that have really kind of resonated with the audience there. And then again, they're going across different genres of programming, and it's not just their own programming that they're investing in. Remember, they're also licensing a whole lot more of content, and a lot of that licensed content is actually doing really, really well on their platform. Suits, of course, was that great example, but it's not just that. I mean, Your Honor, so many of the other shows from CBS, Warner Studios are performing really well for them.
Geitha, it's great to catch up. Geitha Raghunathan there of Bloomberg Intelligence on the latest with Netflix. I know many of you are just tuning in, so welcome to the program, and I'm sure you're only interested in one story. It's not the politics this morning, it's what's happening with a lot of flights around the world, and particularly in this country as well, as you wake up stateside. So this is what we understand waking up this morning here in New York. The global aviation is facing a lot of difficulties related to a computer outage related to one specific company, which is CrowdStrike. CrowdStrike in the pre-market is down quite hard in early trading. This is what they've got to say. We've had an update from them in the last hour, and then I'll get you an update on what we've heard from some of the airlines as well. CrowdStrike is saying they've actively working with customers impacted by defect found in a single content update for Windows hosts. This is not a security incident or a cyber attack. The issue has been identified, isolated, and a fix has been deployed. We've heard from a couple of the airlines stateside already, including United and Delta. I'll tell you what United's saying to customers at the moment first. They say a third-party software outage has impacted computer systems worldwide, including at United. We are resuming some flights, but expect schedule disruptions to continue throughout today. We have issued a waiver to make it easier for customers to change their travel plans. So that's United Airlines. Something similar from Delta as well, Danny. They say this. They've paused its global flight schedule this morning due to a vendor technology issue that is impacting several airlines and businesses around the world. We're working to resolve the issue as quickly as possible to resume operations.
The thing is they're talking about it being, it's paused its flight schedule this morning. United is talking about its issue for Friday. I'm curious to see when these airlines start coming out and saying, hey, not only are we going to give you a waiver if you flew today, but maybe for Saturday, maybe for Sunday, because the problem is more than just fixing the IT issue. We've been talking about this, John. Planes are out of place. There are people waiting to get their tickets. It's impacting a lot of things, and it's not something you can just flick a switch and fix.
I've promised you updates every 5 or 10 minutes or so on Bloomberg TV until we get that ultimate fix. Let's get another one for you now with your Bloomberg Brief. Here's Yahara Hackers. Hey, Yahara.
Hi, John. Shares of Microsoft and cybersecurity firm CrowdStrike moving lower in the pre-market as we see a global IT outage stemming from the two firms. We are now hearing from CrowdStrike CEO George Kurtz saying the company has identified the update that crashed Windows systems around the globe. He says a fix has been deployed. But the disruptions continue. Both United Airlines and Delta, as you said, here in the U.S. have temporarily grounded flights, according to the FAA. And new developments in the investigation on the attempted assassination of the former president. Bloomberg has learned the FBI used unreleased technology to access the phone of the man identified as the shooter. The agency appealed to Israeli intelligence company Cellebrite, which supplies tech to several U.S. federal agencies. The FBI agents aim to pull data from the device to help decipher his motives for the shooting last Saturday. And a drone strike in the heart of Tel Aviv killed one man and injured at least 8 others. The attack is being claimed by Houthi militants and is believed to have been launched from Yemen. The Iran-backed group saying it hit Israel's commercial capital with a new type of drone difficult for radar to detect and vowed to target the city and other parts of the country again. If confirmed, it would mark the first deadly attack on Israel by the Houthis. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara later on in the program. Up next on the program, the NASDAQ and everything else.
If we look back to just last month, the divergence between NASDAQ and everything else was becoming very stark. And you can go one or two ways with that. You can see tech fall down, or the rest of the world catch up. And the latter is happening. I think it's quite positive and durable.
A conversation up next, live from New York City. This is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper.
I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Live from New York City, equity futures just about unchanged on the S&P 500. Under surveillance this morning, the Nasdaq and everything else.
If we look back to just last month, the divergence between Nasdaq and everything else was becoming very stark. And you can go one or two ways with that. You can see tech fall down, or the rest of the world catch up. And the latter is happening. I think it's quite positive and durable. If we see earnings surprise to the upside, valuations are completely reasonable, if not wildly cheap relative to history.
Here's the latest. Tech stocks facing further pressure as global outages disrupt companies worldwide. The Nasdaq 100 already on track for its worst week since April, ahead of tech earnings kicking off with Google reporting Tuesday. Amy Wood-Silverman of RBC writing this: we are in a lower point for volatility, and I don't necessarily think we get much action until the Democratic National Convention and tech earnings. I think both are major event risks for this market. I'm pleased to say that Amy's with us now. Amy, let's get straight into this. You've talked about it for a while. The lack of demand for downside protection around some of these themes. Has that changed since we last spoke?
Good morning. It actually has, John, and I think that actually in and of itself is quite important because we've been dealing in the options market with far more right tail risk since the beginning of the year, FOMO and MOMO, and to have that sucked out of the market, that exuberance and more focus on the downside, I think is a little bit telling, in particular in tech.
I mean, we've seen some pretty big downside, Amy, just since that CPI report. Meta's down 11%, Nvidia 11%, Amazon 8%, Alphabet 7%. A lot of people have been waiting for these shares to sell off, for some relief to finally buy them. Is there any sense that this is a dip you can actually buy?
Yeah, it's a great question, and we've been watching that closely because in the past earnings cycles and kind of pre-earnings cycles, you do see that by the dip. You do see that call skew inversion, and you see people kind of still need to participate. I would say, Danny, we're seeing a little bit less of that, and when we look at that right tail versus left tail, you're still more focused on that left tail headed into earnings this season. And for a lot of us, when we talk to investors, we're kind of saying, look, this earnings season could really be a show me season for that AI story. You're certainly seeing that sentiment in the derivatives market, and we'll see how that plays out. That's why I think it's such a major event risk.
Hey, Amy, it's Stuart. How are you?
Good to see you, Stu.
Yeah, you too, Amy. I guess my question would just be on like S&P puts versus VIX upside. As you mentioned, the put wing hasn't really worked. We're in a rallying market. People may be looking at the low level of the VIX. Like, do you have any view there on how to approach hedging going into these events?
Sure. So look, I think, when you look at S&P puts versus VIX calls, my favorite stat is 2022. You got that 20% drawdown in the S&P, and the P put index managed to draw down 21%. So, put skew has been a fail. I think that's burned some folks. But when you look at VIX call skew, that's actually at historic levels. I'm sure you track that as closely as I do. And you are seeing people deploy VIX call spreads all throughout. And I think that fat tail, but kind of flatter at the money structure is something that people are really thinking about in this kind of low implied correlation environment. And I think that is concerning to derivatives investors. And I think that's why that focus is there, especially in VIX.
Amy, the one thing I'm super confused about is what to do with the DNC at the end of August. What do you do around the DNC when you don't know who the candidate is going to be?
Yeah, I mean, your call is as good as mine. Look, I think when we saw, that big rally in IWM, that spread in IWM versus S&P blowout, some of that was obviously rates related, but some of that obviously was a knee-jerk reaction to the Trump trade. And, one thing Lori Calvisi and I have talked about a lot is it's just a really long road until elections. It's a very much anything can happen. We don't really know how the market will behave. It's Kamala Harris against Trump versus Biden, so I think a lot of things still can happen that we see volatility potholes around that. I don't think you can count on kind of the definitive way that the markets are pricing the election right now.
Even so, this is a market that ran up a lot, especially in the small caps, Amy. Is there a sense that if we do get news that Biden is dropping out and stepping aside, that it is just a plain and simple risk-off event?
It could be. I think when post the assassination, the markets essentially bet for a more definitive Trump victory. And when you saw that happen, you essentially saw the market grab back to the 2016 playbook of Trump versus Biden. I think it was very knee-jerk in the sense that you're assuming a lot of these old economy plays that Trump had talked about in the past are going to be the winners of the future. I don't know that that's necessarily true. If you look at some of the backers of Trump right now, Elon Musk, for instance, could that change his policy? I think the answer is yes. Whereas on the Biden side, I think it's more continuous, as Stu had said earlier, that a lot of those policies remain the same. I think a lot of that volatility is on the Trump side versus the Biden side.
Well, whatever's behind it, Amy, it did have the effect of stopping the momentum trade in its tracks. That had been the dominant thing, the one thing that everyone had clung on to, and that raised a lot of fears that so many people were in this momentum trade that when it stopped, it'd be painful and violent. I mentioned those stocks were down, but it's hard to say it's painful and violent. Amy, where do we stand on that? Is that so-called big momentum trade under threat?
Yeah, I think that's very concerning. And when you kind of look back at the last even 10 years on a factor basis, who is the big winner? It's been momentum. We see evidence of that in the options market. We see that through that right tail risk. And when that starts to bleed and you get that really violent rotation underneath, the question is, what are the factors that win going forward? Is it small cap? Is it value? Can those be sustainably true? The situation is, I think people have been waiting for this for a really long time, but we've had this fit and start where it kind of looks like momentum is losing steam, and then we go right back to it as soon as there's a flight to safety. So I wouldn't count it out yet, but I think that's the bet as we get closer and closer to the potential first rate cut.
Amy, you mentioned a flight to safety there. Are you more concerned about the rotation in falling markets or in rising markets at this point?
Yeah, look, I think it comes down to the math of the market. So, we talk a lot about the bad breadth of the market. And sometimes when you think about the math, it's just very simple in the sense that if tech goes, the whole market goes. So to give a good example, we've had these big days where IWM has substantially outperformed S&P. But in a lot of those days, when you kind of look back to those specific days, the overall market is still down. So to circle back to your question, I would be more concerned in terms of down markets because, if we go back to a normal spot up, spot down, volatility up market, then you're also more concerned about that correlation pickup as well in the market.
Amy, super smart. As always, it's good to catch up with you. Amy Will Silverman there of RBC. I'm sure many of you are just tuning in which case, welcome to the program. Plenty of updates for you on that global tech outage, hitting businesses worldwide, in particular, hitting the airlines. So let's start with the updates that we're hearing from CrowdStrike and Microsoft, two of the tech firms that a lot of people are looking to responsible for some of this action. This is what CrowdStrike has to say. They're actively working with customers impacted by a defect found in a single content update for Windows hosts. This is not a security incident or cyber attack. The issue has been identified, isolated, a fix has been deployed. That was from CrowdStrike in the last hour or so. That stock is slowly recovering in the pre-market. It was down more than the 13% it's at currently. Microsoft's still lower by 1.7%. Microsoft has this to say: the underlying cause has been fixed. However, residual impact is continuing to affect some Microsoft 365 apps and services. Danny, they say we're conducting additional mitigations to provide relief.
That's going to be concerning to a lot of people and a lot of industries, because that's what this has affected. Obviously, the most noticeable one, because you're going to see the lines start piling up, is the airports of people not being able to fly. But it's everything from people's commutes this morning, DC and New York metro systems issues, to Norges Bank having to conduct systems via email and the phone for liquidity operations. It is people getting back to basics, and it is an issue, perhaps, that it is affecting so many industries, and it is stemming from one singular company.
It's amazing, isn't it? Most airlines we hear, the likes of United, Delta, offering waivers if you want to make some changes. United saying this: a third-party software outage impacted computer systems worldwide, including at United. We are resuming some flights, but expect schedule disruptions to continue throughout Friday. We have issued a waiver to make it easier for customers to change their travel plans. Stuart Kaiser with us through the last hour or so. Stu, the good news is you're here and not in an airport. Can we get a final word from you going into the weekend? We started the program here, what we should be looking for. Let's park this and hope it's dealt with. I still want to understand what the market's going to look like next week if Biden steps aside and we're looking at candidate X, whoever it might be, versus Donald Trump, what this market ultimately does.
Look, I think if Biden were to be replaced, then the aggressive pricing of Trump odds obviously has to come under a little bit of pressure. I think you start to get a compression of the GOP Dem odds, and that adds some uncertainty back into the system. It's interesting because next week was on tap to be a huge micro week, right? There were no major macro events. It was going to be all about large cap tech earnings, and now we might, kind of get a political uncertainty reintroduced back into the system. So, yeah, I do think we'll probably put a little pressure on some of the Trump trades that have worked over the course of the last week or so, and just bigger picture, I just think it, to Amy's point earlier, it makes the DNC just such an incredibly important event. And I would imagine if they're going to do that, they've teed up hopefully a process, to deal with this. I think the bigger risk would be he steps aside and there you say, hey, we'll get back to you, or we're deploying solutions and sending out mitigations, right? That's not what you want.
It's quite an incredible event risk. Stuart, where do I hide? Because it used to be tech. It's been wobbling this week.
Yeah, I mean, it's funny with tech because it's a growth stock, but it's also probably the cleanest balance sheet in the world. Multiple of large cap tech have introduced dividends this year as well. So, I think some people view that as the quote unquote new defensive. I would say within the defensive space, the stuff that's underowned is going to be areas of staples, REITs, and kind of areas of healthcare. And I think you've seen all those sectors perform very well. We think the market has been a momentum, growth, and size market this year.
Yep.
All three of those factors are deeply short, all three of those sectors. So if you get kind of this risk-off rotation, it should benefit those areas.
Stu, this was great.
Thank you.
Thanks for being with us, sir. Appreciate it. Stuart Kaiser there of Citi. Coming up next on this program, Rob Casey of Signum, Katrina Dudley of Franklin Templeton, Bloomberg's Sid Phillip, and Jerome Schneider of PIMCO. Plenty of updates on a global, worldwide tech outage. Up next in the second hour of Bloomberg Surveillance.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise